Brilliant. Thank you both. And yeah, it's a great opportunity to now bring academia and business together. And we can really both learn from each other in many ways. Now, I was given the opportunity to speak with Chloe by my good friend Angela Yore in Manchester, a northern powerhouse in herself, but unfortunately she couldn't make it today. But I did say she was featured in your report, as were many people that I know, because you've been doing a lot of research in this space. So tell us about your project and your report, please.
Yeah, so I kind of accidentally came across FinTech, as so many people actually do. And so my undergraduate dissertation was looking at gender inequalities in FinTech. And then over the past year or so, I've managed to work with my then supervisor and turn it into a paper, which, I don't know, yeah, you can read with that QR code. And basically the general thing is when I was looking at the gender inequalities in FinTech, it was so much worse than in the kind of separate industries of finance, technology, and entrepreneurship. And of course, FinTech sits at the intersection of these. And so we kind of realized that there is what we call a triple glass ceiling in FinTech, where you have the long-standing male dominance, continued privileging of masculine behaviors, and some really rigid stereotypes in each of these sectors, and they're brought into FinTech, which then produces this triple glass ceiling and makes non-performative action and long-term change really difficult.
That's brilliant. And, you know, whilst I've been in this space for a long time and feeling a lot of that, this concept of a triple glass ceiling was a new concept to me. And just to, you know, to read a quote from your paper, it says, recognizing FinTech in this way is the antithesis of what the industry self-purports to be: innovative, exciting, and disruptive. On a basic level, how can an industry innovate through homogeneity? Genuine innovative is arguably driven by diverse people with different backgrounds and experiences. So true.
Yeah, and it's really frustrating that, I don't know, I guess people aren't seeing this, because getting equality across various identities, it's not just good, you know, societally, ethically, morally, however you want to put it, but it literally makes business sense. You know, you will only drive innovation if you have a diverse group of people doing it. I think the most obvious example is of Apple when they first launched their health app. It didn't have, you know, any reproductive health on there. There was no period tracker, nothing. And that's because it was a group of guys who'd created it and they hadn't even thought about it. But that's because that's not their lived experience and not what they kind of do. And so many founders, they build products and services for things in life that frustrates them and their everyday experiences. So you need people with different experiences, with different frustrations, to get a product and service that actually serves the entire population as best as it can.
Yeah, no, absolutely. And were there any particular sort of statistics that stood out to you?
Yes. I mean, I don't know if anyone will actually be necessarily surprised, but I think it just highlights the real issues that are there. So in the quantitative side of it, so the data set we created, 4% of companies were led by a female CEO. 7% were female co-founders. There was only one company in our data set, which was of 100 companies, and I can talk about how we chose them later, if people want to know, but only one FinTech was entirely female founded, so 1%. And it's just, that is madness, that is still 2024, but that's still the case.
And some of the arguments that where people try to justify that is that there aren't the founders out there, or there aren't the entrepreneurs there. But when you look at the stats as to who's coming through the business schools and you know who's out there trying to found businesses, they're definitely there, aren't there? Now, yeah. So Jordan, to come on to you, you've been seeking to find ways to address this because you know plenty of female founders, don't you?
I do, Joe, absolutely. And, Helen and I launched Lifted Ventures back in September last year. And we were the original co-founders of Fund Her North and Women Angels of the North. And we took a lot of our learnings, good and bad, in terms of how do we actually increase the dial, taking the triple glass ceiling approach, so to speak. How do we break down some of those barriers? And I guess for us, it's about how we stop talking about, I guess, the lack of funding going into female founders and start to talk about the business benefits to backing female founders. There is research and data out there that does showcase that actually female founders that take on equity-based capital, for example, scale their businesses more quickly and are more likely to exit than maybe some of their male counterparts. So it's really about promoting those business benefits, but then also starting to think about diversity within female founders as well, and starting to think about how we can actually promote the business benefits of actually backing diverse founders as well, and looking at their strengths as entrepreneurs and looking at their strengths as founders, and actually talking about how it makes exceptional business sense to invest in those types of businesses, and to get a real diverse economic growth pattern happening. And one of the things that we're really keen to do and to make a difference with is to actually make the north of the UK the investment capital for female founders and diverse founders. And that really is the mission that we wanted to drive forward.
That's brilliant. And we had a fantastic launch event in Leeds just a few weeks ago, and you've got other events coming over the coming weeks, haven't you?
We have, absolutely. So our event in Leeds was to launch the blueprint, which is being created, which is to support ADHD founders. So it's a blueprint to educate investors and to educate funds in terms of creating those pathways and making it more accessible for those founders to be able to seek investment, and open up those pathways and open up those communities to come forward. And that was done in partnership with Jodie Hill from Thrive Law as well. And it's received some fantastic feedback. We're now in the process of writing one for disability. And the response which we've had from that has been absolutely fantastic, because there is a lot of things in there that make business sense, but also there's a lot of things in there that's quite obvious, but sometimes we don't see the obvious. And actually, if we can start and make that a real key narrative, and as investors and as funds and as institutions, we can make our environments more accessible, we should see an increase in those founders being funded. And that does have a huge impact on the economy. And going back to your research as well, that really does make a real difference.
Yeah.
And certainly creates more diverse jobs. It creates a really healthy ecosystem. And also it just creates a better social environment as well.
Absolutely. And I just want to come back to the comments you made just a moment ago, but just to reinforce, when you said that female founded businesses are actually outperforming male founder businesses. Let's not gloss over that as a statistic. It's not that, oh, well, they're doing just as well. We've actually statistically proven that they're outperforming. Have you got any more on that? And you said also that they tend to exit sooner.
Yeah, it was a report which was produced by the British Business Bank. They are actually looking at a more updated report to come out, but that pattern has remained. So basically, for every pound that's gone into female-founded business, they've tripled that in terms of growth as well. So it has really indicated that there is a real business benefit to it. But the problem comes back to see that actually enhance the economy further, we have to see that more funding going into those female founders. And it's not just female founding teams, it's female founding co-teams as well. We've got to have amazing male allies in those businesses. It really has to be diverse all the way through, but it really does raise the ceiling. And again, as I say, it's a great way. It's really, I'm smiling when I'm saying it, because when we're seeing it day in, day out in our organisation, we're seeing some amazing founders. And to be fair, there's two ladies coming on here next who they're absolutely amazing from Financial. And we're seeing founders like that. And we know that with their investment, they're going to absolutely skyrocket that business. And that's what we want to be promoting.
Brilliant. Thank you. And Chloe, from the evidence that you collated, did you see anything sort of specific in terms of why you think the female founders weren't getting the support?
Yeah, so I mean, there's obviously a few things, right? One of the things is people kind of tend to pursue entrepreneurship following relevant industry experience, but because the surrounding industries are male dominated, there are those cultures, et cetera, that makes it more difficult to do and get those experiences for female founders. But I think one of the most important things is we have this kind of expectation of what success looks like for an entrepreneur.
Mm-hmm.
And because for so long women haven't been able to enter that space and men have been more dominant in that space, you then get, okay, well, that's what success looks like.
Mm-hmm.
These are the behaviors, masculine behaviors that seem to do better. So then people imitate that and copy that. And then investors then start to look for that unconsciously. Because if you look at successful founders, who they've been and what they've been like, they tend to have masculine behaviors.
Mm-hmm.
And so I think a big part of that is then removing that as the benchmark, because you're still reducing the diversity, because then women will try and imitate those behaviors because that's what's successful. And then you get boot camps and stuff that actually teach people to be more masculine and adopt those traits, when actually, no, we should be reversing what we see as success, because it needs to be more diverse than what it currently is.
I think you're absolutely right. And we've all spoken about this before, haven't we? That one of the things that I'm trying to highlight is the importance of strength in leadership versus resilience. And we focus on strength as being this sort of like having a really hard exoskeleton. But actually what you need is the resilience and a really strong core. And if you've got a strong core, rather than exoskeleton, you can still be quite soft on the outside, which then means you're much more able to empathize with your team and much more able to build those relationships. So rewriting that narrative is quite it's an exciting opportunity. And I think the key from an investment perspective, Jordan, is investors, particularly the institutional investors, they pattern match, don't they? Yeah. They look at what's been successful and how do we find more of them.
Yeah. Absolutely. And I've just gone back to obviously that empathetic approach as well. I genuinely believe that is absolutely the core to these female founders being able to grow their businesses more quickly, because they are able to recruit, retain teams as well. Having diverse founding, senior executive leading team, that really does help in retaining staff numbers and actually getting the teams to perform as well. I think going back to your comment there as well, Job, about the investment landscape as well. We operate in the angel investment landscape, so early stage, foundation investment level. And it's really important to have more women angel investors participating in investment rounds and supporting female founders as well. The true saying going is women do back women, but there is a real lack of women angel investors in our ecosystem as a whole, but even less in the northern regions. And one of the things when we founded Women Angels, and then obviously we founded Lifted Women Angels now, is that we want to really educate women in all walks of lives that they can also be angel investors, distilling some of those myths around how much money needs to be invested. We have no minimum investment criteria, and that really has opened up more women to think and consider what angel investing is about. Mm-hmm. We recently obviously had some of the FCA changes which have been reversed now, and actually there's lots of negativity came out of that, but what Helen and I both agreed on is actually some positivity came out of that messaging, because people got to learn more about the asset class because they were seeing it on LinkedIn and thinking, well, what is angel investing? So I think our job really now is to distill the myths, grow the women angel investor capacity, and that really should fundamentally have a knock-on effect in terms of the female founders being supported, but also great women backing great men as well. Yeah. So and it's diversity through.
It's just building the confidence, isn't it?
Yeah. I was going to say, just on that, I think another thing with the reversal of the angel investing is really positive in the fact that it shows, obviously we went back to the same position, but it shows what can happen when everyone across the industry and beyond the industry comes together. We managed to get that reversal. Yeah. And I know, in the grand scheme of things, we were kind of back to zero, but it does show what can happen.
Yeah. And on the same day as we had the Lifted Ventures launch, there was also the release of the paper on the high growth women entrepreneurs, and there's some actions from that are being implemented now that you're involved in. Do you want to speak about them?
Absolutely. So out of the Women High-Led Growth Task Force, the report came out, and one of the opportunities was to grow regional boards. And Zandra Moore from Pan Intelligence was obviously really pivotal in obviously that report being completed. And one of the data sources and recommendations really highlighted the need to have these regional boards. So we are running 5 regional boards. So we've got Liverpool, we've got Birmingham, Edinburgh, Newcastle and Leeds. Claire's coming on shortly, and Claire's actually vice chair of the Liverpool board. And it really is setting out to see how we can support more high growth female founded businesses, and looking at how we can increase the capital coming into those regions to support those businesses, how we ignite more networks, how we include more sector and industry experts within those networks as well. So we're delighted to have Lorna Green of LIBA, and obviously Claire from Baltic Ventures leading on the steering board for Liverpool.
And where are people going to be able to find out more about that?
Absolutely. So we do have a website. So it's www.theliftedproject.co.uk. It is all going to be led by data. So Data City and Pan Intelligence have actually pulled together data sources for those regions, so we can see exactly the activity that's happening with them female founded businesses, which will create the strategy for then the boards to be able to roll out the activities, and a strategy which aligns to helping the businesses which are being showcased in the data. So it's an absolute fantastic project, which obviously Zandra Moore from Pan Intelligence has brought to light.
Brilliant. And what are you going to be working on next, Chloe?
So as I said at the start, I'm in my first year of my PhD. So the research that I did initially was very exploratory, and now I'm doing my PhD. I'm able to spend the next 3 or so years going a lot deeper into that same topic, which, I'm really looking forward to, and hopefully I'm sure I'll speak to many people in that process.
So I'm sure there's plenty of people here that you can make contacts with in order to be able to interview for the next phase. If anyone's interested in learning how to become an angel, then Jordan's got a great course. And I guess the top tip from here is, if you are able to consider angel investing, look at female founder businesses, because they are currently massively outperforming. So thank you very much, Chloe and Jordan.
Thank you very much. Thank you.
Thank you. That was awesome. Come on, grab your seats again. I mean, what you said, absolutely right. Action speaks louder than words, but I think nothing drives action more than data. And the data points are just more and more indisputable around the need to improve diversity, particularly gender diversity in FinTech. That QR code, in case anyone didn't grab it, for Chloe's research. So as previewed by Jay, we're going to welcome Claire and Laura and Holly to stage now. I'm going to let you take the lead on this one, Claire. Yeah.
Fantastic. Thank you, Julian. You're too far away from each other, are you? You can sit next to each other. You know? Spend too much time with them anyway. No, it's just an awkward chair, isn't it? In the middle, like, you sit here, do you not sit here? Hi. Welcome to the stage. So, following on from that fabulous panel, we are somewhat controversially maybe talking about what the banks and fintechs are getting wrong with personal finance. My name is Claire Lewis. I'm the CEO of Baltic Ventures. We're an early stage tech accelerator based here in Liverpool. And Holly and Laura from Financial were part of our first cohort that wrapped up in January, which feels like ages ago now, doesn't it?
It does. We really miss you, Claire.
We're in denial. I don't think you're never going to get rid of us. Would you like to introduce yourselves and also say a bit about Financial and what Financial is?
Absolutely. And just to shout out to the ladies before us, that was so interesting. I was forgetting that we were speaking next because I was so engrossed in everything. And so I love that formed a big part of the schedule today, and that we're here to share a little bit about our story. And we're not sure if we might be the only duo female founded fintech. I think it's us, Chloe, but we can check the data later. It might be us. Financial is an accidental business, and we call ourselves reluctant entrepreneurs. So to find ourselves in the fintech space, when we first launched, actually, we started to talk about it in 2020. We spoke to an amazing lady at Barclays, and we were like, "Are we fintech? Do you remember?" And she was like, "You are definitely fintech, because what is it? And is it this weird world that no one's allowed in?" And so yeah, we founded Financial formally, 3.5 years ago, but we raised our pre-seed a couple of years ago now, and we're almost finished on our seed. And we help mainly women, but men as well, take back control of their money.
Yeah, no, that's it. In a nutshell, that's why she's the CEO.
So can you tell us a little bit about, we just mentioned that you were part of the first Baltic Ventures cohort. What progress have you made since you started Baltic Ventures back in September?
Firstly, Baltic Ventures has been one of the best experiences that we've had in Financial, and we have been included in a lot of things. A lot of people ask us, like I said, as female founders in fintech, it's a rare breed, if you like. So we get asked to attend a lot of things, and will you come on this course? Will you come on this accelerator, incubated, like you name it, we've been invited. And in the beginning of our journey, we used to say yes to everything, and that's great. It built us a lovely platform and an amazing network, and we really got engrossed in the specifically Manchester ecosystem in the technology sector, and especially fintech. And then when the Baltic Ventures opportunity came up, we knew Mo, obviously, from the exchange program in Manchester, knew a lot about Claire, but the program that was presented to us, it was such an amazing opportunity to be in a cohort of people, like-minded people on a similar journey at a similar stage. It's just really rare to be able to get that opportunity, that face-to-face, every week, to look each other in the whites of their eyes and kind of share the difficult journey that is entrepreneurship, especially in the North. And it was just fantastic. We have been exposed to amazing coaches, advisors. We've managed to hire 2 team members, both from Liverpool, which is an amazing success story for the region, through the Baltic Ventures program. And in terms of success, I think we were reflecting on, what success we've seen since the Baltic program, and it is definitely growing our team. Laura and I are really stubborn. We're super capital efficient.
We're really tight.
To our detriment. 2 girls from Wigan, like, you give us money, we're going to do a lot with it. We're stubborn in that firstly we thought we didn't need to raise, but that was when we were building our MVP, and it served us really well to be capital efficient. But our advisors from Baltic made us see that in order to be able to grow and scale this product, and we have now, we're in 180 users in 188 countries, paying users is 122, you absolutely need really good people to help grow the product. So I think Baltic Ventures really helped us give access to an amazing pool of talent, especially in the Liverpool region, but just to give us that confidence to kind of go for it and scale and quickly.
Fantastic. So I think, one thing, and there's been many things that's really impressed me about meeting you and watching how you're building your business, is your almost obsessive focus on your customers, and you know them inside out. I mean, they're almost personal friends with you, aren't they? And just, from my experience, the best founders are that obsessed about their customers. Based on the insights that you've kind of developed about your customers over the past few years, what are you seeing that the banks and fintechs are getting wrong currently with personal finance?
I think we're on customer calls every week, sometimes every day. We've done 2 amazing ones this week where it helps to reinforce what you're doing right, but remind you what you're missing, or you spot new things. And I think that how long are we allowed before he kicks us off? Fintechs and banks typically focus on product and features and tech. Like, it's so much about the tech that so many people forget about the person that's using it. And even then, when they remember the person that's using it, they think about the UX. How are they using it? What buttons are they clicking? What would be really cool? And it's kind of a bit of a vanity project, that it's not going right to the person at the other end of it. So we rarely use the F word. Well, we use the F word. We don't use finance. You look at our content, you will never see finance on a TikTok. You'll never see finance in a blog post. You'll never see finance, because our users do not use that word, because they're just running their life and they're managing their money. So when we so when you see our content, it's because we've literally lifted what a customer said to us. And I think a lot of fintech founders and tech founders shy away from those customer interviews early on because you kind of got a roadmap and a plan and we're going to do this. And literally it could be just bullshit. It could be useless because that's a lovely idea and it's not what someone needs. And actually some investors very early on wanted us to build a female investment platform and we were like, that's not what they need, because actually, coming back to some gender disparities, which you talked about earlier, they've not got excess cash to invest. So we help people at the very beginning take control, feel better, manage their money so that they can invest. If you jump straight to the investment platform, you've not spoke to the customer, because there's plenty of investment platforms out there that do fine, and you don't need a pink one. Like, I know we're pink, but we play that like it's not because we're pink, it's because we do the beginning bit. So I think there's that point. I think it's then how you speak to your customer, isn't it? In like,
yeah, I think we were reflecting again the other day, like, what is it that's different about us and what do we do different to your traditional banks or fintechs? And I got an email from Co-op. I didn't understand it. And I was a customer and I own a fintech company and I speak to banks every day and I deal in personal finance and I could not decipher what Co-op thought I needed, what product they were trying to push to me. And it just really reinforced that we put the personal back in personal finance. Like we always...
Do you need,
still don't know.
It was an LPA. Okay. Do you need a lasting power of attorney? But they called it LPA. This was a retail email to, I had got it as well. So to all, and you're just like, that's, so I think there's that. I think there's probably a couple extra mini things, which is typically banks would be built by men for men, which again, going back to the Apple Health example that Chloe used, I've seen another great one where it wasn't in banking, but there was the hand sanitizer dispenser and it was built by a bunch of white guys and it doesn't work on black skin. So they never thought to, you know, if there was diversity in the product development, it would have worked for all of us, but it only worked for, white people. So they come at it from a particular view. And then the other big thing, I will talk about to someone about this before, open banking has meant that loads of cool features have come out, which really just don't help a user. Like, you've spent too much, you've been to Costa, you're spending a bit at Costa, you're like, I know I drank the coffee, I chose to buy it, I know I did. Or, people rounding up the spending in the background, that's not changing someone's life, that's helping them save a couple of extra £100 at the end of a year. So that's kind of some of the stuff.
So can you share how you are changing users' lives? And
so I guess picking back up on that point, we want to change habits. So really get under the skin of why someone's out of control. And if someone is an overspender, just reminding them that they've gone on Uber Eats too much. There's nothing concrete there. Reminding
probably
someone
triggers shame and all else.
Probably makes them feel worse and makes them go, I'm not like done, I'm not looking at it. And actually we help to normalize emotional behaviors, because money management is 90% personal, 10% finance. It's not the maths, it's how we manage. And if you can give people structure and a support system and a community, they're going to be able to build momentum and not be shamed. Also, when I think some of, I'm not going to name them because I'll get in trouble, but some go, oh, cut a subscription, you might be able to buy a house. Like, what if I like Netflix? What if I'm not going out? What if actually you've not understood me as a person, and you've not understood that I'm not going out, I'm not going out for tea, I'm missing holidays, but my Netflix keeps me happy. You telling me to cut $7.99 a month? Oh, it's more expensive now, isn't it, when you don't nick your mum and dad's? But it's just not, that's not helping. So we try and do the habit stuff, don't we?
Yeah, and I think we understand why people come to seek us out, and it's generally because of a life trigger. So someone's we have a lot of people in our community that are just going through a divorce, and it's the first time that they've had to control the finances them alone and not with a partner. They have to think about long-term wealth, which they've never really thought about before, because they've been dealing with buying the school shoes and doing the grocery budgeting and all the really short-term everyday money decisions that you have to make that are actually really overwhelming and take up a lot of capacity, whereas their partner might have been able to think more long-term with finances like pensions and investments and those types of things. So really understanding why people have come to us and then serving up content that's suitable for them. So not asking them, do they need a LPA, okay. But do they need help with their budgeting? So we, in terms of the tools that we've got in our app that absolutely promote habit change, we've got a playbook, and that's the Couch 5K for Money. You cannot run a marathon by watching YouTube. You have to get your ass off the couch and do the 5K and do the next lamppost until you can run a marathon. And I think our playbook is a step-by-step guide to help people do that. And we also help people along with a community. So we've got a community in-app. we did a really good test and started a WhatsApp community first. And my husband goes mad because every day I've got 700 WhatsApp messages from community members messaging in with their wins, their worries, their losses. And I think that's really missing in the finance space. Money's very much a taboo, and it's not something that you'd necessarily speak to your colleagues about.
Yeah, this is the thing. I guess we don't really talk about money with our friends often in an honest way. You guys have got a fabulous podcast series that you've just launched, The Vault, which has become a bit of a kind of like, it's our addictive like weekly podcast in the Vault Adventures team, and we share our kind of like smugness around, oh, we're doing this with our
what would you do?
Yeah.
But it is that, Claire. And this is again maybe something that the banks and fintechs need to learn, but also can't do. Like if you're in a regulated environment and you're a trusted establishment, and we get that, and you can't be all things to everyone, so you kind of maintain this like pretty standardized and elite kind of image. But when the Vault is about normalizing conversations about money, and it delves into genuine dilemmas that we get about, and we try and not shame people, look at both sides and stuff. But even like with the WhatsApp group, like we got this, sometimes people are really struggling, like, and it's now a community on the app. Like I said, it was in beta. People share, they're at the lowest of the low, they're in lots of debt, they're out of control, they have been through whatever. But then like, oh yeah, on Friday, I've just got a new job. It just means this for my budget. We got a baby picture, and someone had a baby, and we remembered her a year ago, a bit longer than that, setting up the sinking fund that we taught her. Set up a sinking fund for an event that's going to happen. So if you want to have a baby, it's going to happen. Then you're going to have to pay for it. So start it now. And to see the baby appear and the great, oh my God, it was so emotional. And those are the real life stories that I guess sit behind tech.
So you guys are changing people's lives. It's amazing. So just before we wrap up, if you were advising a bank CEO or a fintech CEO, what would your advice be to them in terms of improving how they relate to their customers?
I think it's really, I think we appreciate the difficulty in being really personal as a long established bank or a fintech. It's really difficult to then revert back to a startup mentality and get really close to the customer. But I genuinely think that's the only way that personal finance can be personal. They're finding out those live triggers. Why is it that someone absolutely needs Starling in this moment? I think the neobanks do it much better, like Starling and Monzo. They've obviously built out features that are curing problems that people have. Like I saw today, they did a split the bill on Starling, and you can send a Monzo request. It takes the awkwardness away of someone owing you money and you having to go, Claire, do you know when I bought you that meal out the other day? Like it's just a Monzo request. And for the generation that works for, we don't pick up the phone anymore. God, if someone rings me, I'm not going to answer it. I'll just WhatsApp me. That is building features for people, for their customers, but yeah, getting close to the customer and not sending me a blanket email asking, do I need an LPA? I'm not engaged. I don't care. The trust isn't there. I think it's hard. You can't be a face of a bank, really. I think Anne Bonen's done it quite well. But we're looking that we can be the face of our brand, and that creates trust.
Yeah, but trust is a big thing. So there's, financial services inherently not trustworthy. Like people have got a lot of feelings of the past like 10, 15 years. And so it's really hard to build trust. But I also think in the fintech space, there's so much about features, and you just get lost in a sea of loads of really good ideas. But the minute, and we are finding an investor that empathizes with the problem is actually, if you've got a lot of features, you're probably going to get funding because investors like that typically. But I think if you can connect and tell the story and understand we are changing lives, and that's why we're doing this. When you see those wins and you go, okay, this is not something that Barclays right now are offering, but in the future they could. So I would say to them, speak to your customer, stay close to them. Don't just get obsessed with features, but get under the skin of how can you play a part of someone's like overall life, because when they need you and you're there for them, that's just like money can't buy.
So it's bringing the personal back into personal finance.
Ironically.
Yeah. Thank you, Holly. Thank you, Laura.
Thank you so much. Thank you.
Thank you, guys. That was awesome. The last two sessions were so good. I'm just sorry you guys didn't have longer slots. So it was really, really brilliant. Okay, so we've got one more session before we have a brief afternoon break. Gella's back. Come on back up, Gella. And you have got 3 people joining you, which is Gary, Matt, and Swati. So if you guys want to come up, where are you? There you are.
I am a bad penny. Should have warned you. Please. So if you didn't hear that, Gary's quite worried about his shiny dome. And if you are blinded by it, you know who to talk to. I will forego any reintroduction because you had to hear from me this morning. However, today we're going to be talking about how finance can potentially impact social change for good. We've talked about FinTech for good for a number of years, but starting to see it materialize and have a longer term effect, but also the rise of certain types of technology potentially have a very different unintended consequence for which we are unprepared to forecast and to mitigate. And in particular, I think we'll be talking a little bit about, as you might see on the screen, there's some AI knowledge in the house and generative AI in particular. So there will be some discussion around that. I'm looking forward to a little bit more of the not hype, but the realistic approach to this. But also we've been talking about a number of different aspects. And I think today we're going to blend ESG with wealth gap and financial health, along with how technology impacts how we view the potential solutions. So I'm going to ask each of the panelists to introduce themselves because I will fail at doing it properly and giving them their just rewards. And I'm going to start ladies first.
Hello everyone, I'm Swati and I'm lecturing financial technology in management school. I'm very happy to see all my students are here today attending the conference. And also I teach Python programming to my students and LaTeX. Other than teaching, I have interest in responsible application of responsible AI in finance.
Bringing the ethics. Thank you. I'm so excited for this. This is going to be good. All right. Mark.
I am Matt Latham, co-founder of a fintech called Circa 5000. We founded the business in Liverpool in 2019 as a direct-to-consumer investment platform. We scaled that business to about 170,000 users, and we launched a investment fund business out of Ireland last year as well. And yeah, we focus on positive, what's called impact investing. So all of the investments that we offer are connected to a social or environmental positive outcome.
Thank you.
Hi, good afternoon, everybody. My name is Gary. I'm the founder of a company called Carbon Happy World. And we look at ESG carbon accounting for businesses large and small. We've got a number of platforms, one for hospitality sector, which is a SaaS product. We've got another small business SaaS product starting later on this year. And we do ESG reporting, talking about the journey that people have to go on to have a responsible, ethics-driven business, considering the environmental impact and climate change is having at the moment. And what are they doing to actually change the way they think and work?
So I think what's quite interesting about finance is it's incredibly, as we've seen, personal. And so we look at the micro, the immediate impact it may have on our individual choices. And that is incredibly personal because it does affect our day-to-day life and what we can and can't do. At the same time, we're starting to recognize that we cannot be as self-oriented and self-centered as we would like to indulge. Rather, we have to understand how we affect our community and society at large. And as a sector, we have a bit of a moral obligation, in part because we are underpinning every aspect of every life. Finance is embedded in every choice that we make. There is some sort of opportunity cost. There is some sort of transaction that happens, there is some sort of choice that has a financial impact every single moment of the day. So when we start to blend the micro and the macro and trying to find a balance between our own personal approach to how we live and our choices, as well as how our choices impact the larger ripple effect across the community and the social structure, the social fabric, that becomes a very interesting intersectional point. I want to get some idea of how each of you have actually seen the effect at grand scale, but also micro, in each of your businesses, because you made very deliberate choices to build a business around ESG accounting or around closing the wealth gap, or you have spent time actually examining how data, technology, algorithms, things that we assume actually drive our behavior, and that we are pre-programming certain outcomes without necessarily thinking about their wider impact. So get ready for a little bit of a wide ranging conversation, but it all comes back to how do the things that we build and this ecosystem that we are deeply embedded in actually start to impact the daily fabric of our individual lives and the wider tapestry that we're weaving collectively. Gary, I'm going to start with ESG because it seems to be a bit more in the zeitgeist. And there are a number of challenges around how we measure any sort of environmental impact, let alone the sustainability component, as well as the social governance and that sort of thing. Talk to me about how you started to look at this and some of the things that you're bumping into on a day-to-day basis that are fundamentally changing the way businesses behave that would then impact carbon footprint, our march to net zero, our ability to actually not burn up come July, that sort of thing. Because quite frankly, having hot flashes on top of 40-degree weather is my idea of an eternal hell, and I'm living it. I'd rather not be there. I'll be there when I die. I want a few more years on this earth without actually experiencing my eternity just yet.
I think the big challenge for what we do is it's a very new business. It's only been around 3 or 4 years, and the data is, compared to the financial sector, is quite limited. Whereas finance has had 300 years or so to develop its rules and institutions and its laws and understanding and a culture. What we do is 3 or 4 years old, and the culture's developing. The understanding of where you get some of that data from and the thinking about what you do with the data is really important. The other challenge for us is the clock is ticking. So we have to make sure that what we do is accurate and accountable and authentic. And to make sure that that happens, we have to search a lot of data sets. And that's a big problem. There have been some, it's a bit of a wild west out there sometimes with the way people interpret data. But from our perspective, we tend to follow what's called the UN greenhouse gas protocols that allows us to say what we say with a degree of confidence, but we still have problems mining that data. And we're just entering into an AI agreement with a supercomputer just south of the city of Liverpool in the Hartree Centre to help us with that, because there are over 600 authoritative data sets in the world, and we have to sort out which is relevant and which is not, because there's a lot of self-interest. So you get a lot of organizations which will create their own data because it looks good for them, and people believe it. The obvious one for all of you would be, if I go flying, I'm all right because I'll plant a tree and everything's okay. Well, that tree's about that big and it's likely to die, so you've wasted your money. But from a business perspective, you've got to start looking at how do we interpret the data, and how does that data then become part of our everyday working environment. So it's not just about your balance sheet with your figures on it, it's also your balance sheet with your carbon on it. And I don't think companies have really got their heads around that yet. Those that have are the ones that are going to win in the future, because those companies will lead and drive their supply chains to make sure that they are involved in that eco journey, the ESG journey. And if there are weak dominoes and a domino falls in there, then ultimately that supply chain could fall as well. And we deal with organizations all the time now which are saying to us, if a supplier doesn't engage in a ESG supply chain journey that we're on, then they're out. And it's a black and white case, because they're serious about what they want to achieve and how they're going to drive that. And you've got to share that data between yourselves. One last thing. This is not about a me or you. It's about all of us. It's about all of us getting engaged in this process, because the climate affects us all. And the finance sector, just one last point, sorry, is from where I see it and with the finance organizations we work, they're thinking about what impact the lending or the asset has on a particular risk for them. But what they're not doing yet, which I think is coming down the track, is that you've got to start looking at how a client or a supplier or a customer, an individual, has a climate risk. Because that climate risk is going to grow. And that could be, do you live in a floodplain? Is the business sector you're working in vulnerable to climate change? Are you a person who acts responsibly when it comes to climate? Those type of things are going to start coming into your almost like a financial credit, a carbon credit score. I think that's the way it's going. And although it's maybe 2 or 3, 5 years away, people have got to start thinking in that sort of mindset.
Well, I think people are actually starting to think about this now because it is about an asset liability balance sheet. And we're seeing a lot of lenders in particular looking at what the outcome is for whatever it is they're financing, that they're actually extending credit for. And they're now being asked to report on their balance sheet, carbon risk, just ESG in particular, right? And standardizing that reporting, because if you can measure it, then you can affect different decisions around it. And that's becoming materially important, not only for businesses, which you're supporting in the accounting space, but if you start to see the bigger impacts, we're seeing zones where insurance is no longer offering coverage, either for fire, for earthquake, for flooding. And we've seen recently a lot of insurers actually pull back from the market saying, once your policy expires, we're not renewing. Your home, which is also your biggest asset, we're going to talk about wealth building, is no longer covered. Your risk just skyrocketed. So you choose to stick around for another hurricane season. And I say this because we're seeing this a lot in, you might not be able to tell, I've spent a few years in the States. I pay attention to the political landscape. And I have a particular schadenfreude moment when Ron DeSantis, who happens to be a highly conservative governor of Florida, is no longer able to provide coverage for the denizens that have actually voted him in place, which is interesting because it's a reminder that your choices at the polling station also fundamentally impact your ability to, I don't know, live in a sunny, nice climate next to the beach or retire with an actual piece of true wealth that you've built because you've been able to do so. Now we're looking at an interesting space in this country, especially around the housing crisis. There isn't enough to meet demand. There also isn't policy in place that accelerates that from a business perspective, nor are we necessarily rewarding financial institutions at the rate we could when they start to change the aspects of what they're financing, especially when we talk about greener homes or greener businesses or developing commercial zones that are very much around smart city and looking at reducing the carbon footprint. But let's go to homes in particular, because when we talked earlier, Mark, you mentioned a lot of people are looking at homes as the primary asset for their wealth building in the future and a reliable draw that will allow them to live in comfort past a certain point. But that's not the case anymore. We're seeing that not be an option for a number of demographics. How are you thinking about that particular aspect and the long-term financial wealth in terms of the life cycle of the individual customer? But how do you start to think about that through technology and designing a digital solution that allows for a different experience to accumulate wealth in a very non-traditional environment? Also, again, accounting for the changing nature of social mores, values, and then the crises that we face that are very physically, politically, and emotionally present. It's a long question, but here we go.
I'll try to remember it all. Yeah, so I mean, I can only talk about my own business. It's probably the only thing I actually know about. One of the reasons we started the business was, like Financial, we saw an underserved market in financial services, and it was for people to be able to access impact investing as large institutions can for themselves. And one of the reasons that we thought that was a good thing to do was that basically there was a whole generation of people who were not engaged or not engaged enough in investing to build wealth. This country has an obsession with home ownership, which is more of an obsession than in other countries, and it is really largely the way that the previous generation has built their personal wealth. Is they took a big leverage bet in the way of a mortgage on a fixed asset, being a house, and it paid off for them because of structural supply and demand gap in the housing market in this country. So they also were the generation that had defined benefit pension schemes, which are pensions whereby the responsibility to make sure that you have an income into your retirement sits with the employer and not with you as the employee. That has changed. So defined benefit pension schemes are few and far between. They basically don't exist. And it's harder and harder to get access to the property market. So we need a solution to allow people to engage in sensible investing and to open up investment markets to allow people to invest in a proper way, but without the need to already have sufficient wealth to go and see a financial advisor. So these are structural problems we've got. This is what we tried to solve. But I think in terms of that's our approach to opening up those markets. I don't think that necessarily fintechs in general having an impact on society should be about just opening up all aspects of financial services to anyone who wants to access them. That is a dangerous concept. But it's about sort of services like financial and services that allow people to get that ladder onto taking their own personal finances seriously and actually being able to put realistic and sensible plans in place for their own future.
Was that a subtle dig about crypto investing?
Well, it's not just about crypto investing. I mean, whether you'd call it crypto investing, whether they're two terms that sit together.
Crypto speculation, crypto gambling. All right.
I think it's just about, there's this phrase in fintech, which is democratizing X, democratize and stick the name of the service in. There's certain things that you perhaps should democratize: access to proper budgeting information, access to, affordable loans, access to a current account, access to these things. These are things that should be opened up to people as much as possible. There's other things like, CFD or spread betting, where the adverts actually have to carry a disclaimer that says 75% of people who do this lose money. Well, that's not a sustainable or reliable way to make money. You saw it in lockdown during COVID that, stock market investing became the replacement to gambling, basically, for a lot of particularly young men in that time. And they were taking on, Bitcoin or crypto speculation, same type of speculation in buying sort of GameStop shares or frankly buying any single line stock who, nobody knows whether that stock on an individual basis will go up or down. Even the active professional fund managers don't know. That's why they do worse than the benchmark indices on average. So, this is just, there's certain things that can be positioned by a firm as opening up access or democratization, but really what it's about is creating a new market and exploiting the fact that people will want to buy something that they perceive to be, a shortcut to wealth building, which doesn't exist.
Well, we touched on this, actually, the previous panel touched on this, the emotional aspect of finance and how there is a bit of taboo around it, but also how most of our choices are driven by something incredibly personal that we don't necessarily map at scale for a wide market. If you're talking about investing and you're talking about savings and wealth building, or being able to even start on that particular ladder, because it isn't an easy thing to do if you're trying to meet your basic requirements. How do you start putting guardrails in place, or how do you think about that as a company when you're designing for the best outcome? You have to design for vulnerability. You have to design for, to a certain extent, personality impulses and choices, but also behavioral psychology. And there's someone out there who's predicting or determining what is a good outcome. that's not necessarily universal. And who is the arbiter and the adjuvant of that? Because if everyone were left to my devices, they may not benefit because I don't necessarily recognize what is actually the best for that person. So what's this dividing line, or what's the balance that we need to strike between individual choice, free will, and determination, at the same time preventing as many negative outcomes that we can forecast, at the same time also not hindering people's ability to make choice? And these are not technical questions, nor are they business questions. They are moral and philosophical questions. So how do we do that as an industry? Or what are some of the things that you've had to think of as a founder around this? Because we got glimpses into this earlier with Financial, especially. It gives us an indication of some of the philosophy that guides the businesses that we're building. Give me an answer if you've got one, or work out that answer while we're here, because
yeah, I mean, I think, you know, so take the example before, should an individual have to, or should it be a very easy thing to do for an individual to buy an individual stock through their phone and own that shares in that company? Generally, I think people would say yes, they should be able to do that if they want to. So it's in the same way that, should someone be able to perform their own dentistry at home on themselves if they so choose to? Yes, if they want to. Should they? Probably not, if they want the best outcome. But it's that sort of comparison. You know, so I would believe that if someone wants to do it, fine. I think where we could really go a long way into changing people's behavior is through education. You know, it's probably everybody in this room would accept that it's probably not the best idea to perform, you know, any serious dental work on yourself. Whereas if you say, should people be able to buy and own a stock, it's probably a bit more confusing, and people have different views, or don't really know what that even means, or what, you know. So I think there's a real problem with basic financial education in this country, and probably others. But I think it becomes especially apparent when you start to talk about pensions and people providing for their future. Everybody's living longer. Everybody's, you know, people are finding it more and more difficult to put surplus income away for their future because they don't have any. But also, people are probably not aware of the tax advantages and things around pensions, just the general rules. So, you know, I mean, it's a common thing that people say in terms of a pension time bomb or a ticking time bomb in that space. But I think we really do need to solve the problem through education. And I think a basic financial education in schools and amongst as much of the population as you could would allow it to not be a more prescriptive thing to say people should or shouldn't be able to do this. But I think it would allow people to make better choices when those services are available to use on the market.
And Matt, what's the problem with future-proofing your business for your pensions when it comes to the likes of the climate crisis and people's awareness of what that means for when they're investing? Is that something that you consider when you're advising, or do people ask you that type of thing?
Well, the funds that we offer, so we're a fund business primarily now. So we primarily offer investment funds that people can buy, or pension schemes can buy, or other people can buy. And one of the main things there, I think, if you're talking about time horizon, is what type of businesses do you want to be invested in, or what type of risks do you want to be exposed to if you're taking a 20, 30, 40, 50-year view on holding period or time horizon for those investments. You know, do you want to invest in a load of legacy companies that probably won't exist over that time period, or do you want to try and back companies that have the potential to either grow their product because of these sort of structural trends, or do you want to be involved in companies that have the capability to develop the solutions for these structural problems that we have?
And are people asking for that, are they? Are people asking for green options? I know we talked about green deposits and things. Is it the same for you with investors in pensions to...
The demand for that in institutional investing is far bigger than it is in retail investing. Obviously, there's a whole separate conversation we could have about the problems with how those investments are defined and what that means. But yeah, the market for that is huge. It got dented a little bit because some of those industries, especially climate related and clean energy related industries, do not perform well in a high interest rate, high inflationary environment, which we've had. But, you know, the underlying demand and the underlying need to invest in those things hasn't gone away.
I'll just wait till quantitative easing returns, then we'll have a very different conversation about that composition. But Swati, this is really where the ethics and morality of technology being applied to big choices, and primarily those that touch swaths of pretty much everyone, versus the micro decisions that we make on an individual basis. When you are looking at this and talking to students who are on the cusp of entering the workforce with a very potentially different makeup and understanding of the world than the old people, and looking at actually creating systemic change, what are some of those conversations you're having? What are some of the things that you question and get them to discuss around technology, its application, and how you start to, again, interface with that on a day-to-day basis? Because all of these decisions that are automated, all of this data collection that we're doing, it's driven by artificial intelligence of some sort and data. But AI is also just composed of algorithms, which for the basic, it's a formula. It's a if-then statement. And it's made, algorithms are all assumptions. And my favorite thing about an assumption, to assume, is to make an ass out of you and me. And it's a really big danger that we make assumptions that are absolutely inaccurate and don't reflect either an ethical output or a beneficial output. How do you start to deal with this? Because you're at the very root of all of this application. Give us an idea of how social impact actually manifests itself in these nascent conversations with the students and in your classrooms.
Yeah, so I think most of the students, they are really driven by technology. And for example, financial technology students, they have huge interest in artificial intelligence. They're really eager to learn about it.
Bring the microphone a little closer.
Yeah, so they are really eager to learn about it. Artificial intelligence is the application, not only AI, it's one of the technology. Other than that, they're really interested in blockchain as well. So I think among the young people or maybe students, you can say that they really want to learn this technology and they're really eager to apply that. And one of the reasons is they think that it's easy to get the job because if you have those kind of technical skills. But at the same time, when I teach them and at the same time, my research, it's focused on responsible use of AI. So I always tell them that, okay, learning those algorithms is great. However, those algorithms are driven by data. And the most important is whenever we make an algorithm, it doesn't contain every subset or it doesn't represent every demographic. The data doesn't represent that. And the worst part is we don't know what it represents and what it doesn't represent. So what we really need to know that even if we make an AI model, we have to know that what are its capabilities. And the second thing is whenever we make AI model, that's one more thing. It's also in regulation that they have to be transparent enough whenever we give the decisions. That's one more thing that I always talk about, that make AI models, but they have to be transparent. And also whenever you make them, you have to understand in and out of it. So it's not just you dump the data inside the model and you expect a wonderful results. You have to understand how they works. So I always tell them, okay, there are a lot of technology where you can just dump the data in and you get the output and you see the metrics in AI that this is like 90% accurate, but it's really dangerous. Doesn't mean that it's a good result, because you don't know what it cannot do. It is representing what is inside that data, because large part of the data is actually missing. So again, speaking in finance, I work with underserved communities as well. So most of the time, for example, in banks, especially in retail banks, they have data for people who have very good credit score. And most of the retail banks doesn't give loan or any kind of financial products to underserved people. So they do not have data for them. So that's where I think the fintech comes there. They have positioned their products and services where others can, especially underserved people, can access it. At the same time, fintech, they are doing great in terms of banking as a services as well. So they are working with the banks, providing specialized solutions. So that's what technology is doing. So most of the fintech firms, they are helping with underserved community, providing products and services which banks are not providing to them. At the same time, they are working with banks as well because they are giving them a lot of competition in terms of digital innovation. So so they provide them specialized solution, for example, software, and of course AI is one part of it. It's not just whole story. So yeah, so that's everything is actually, I wouldn't say is AI, and most of the part of decision making still I would say is not driven by AI. It is still the dream that we give decision by AI. And most of the decisions, I have seen the models, some of the firms I've worked in, some of the banks, and some of the law firms I've worked, they're just simple if-then rules. There is no training of the data because every time there is one complaint, we don't have the data. So they're just simple if-then rule, and that's not what AI is actually. AI is like you have the data, you train it, and then also you incorporate the human knowledge. But at the moment, because of lack of data, we cannot fully use AI. So there's one field of AI which is very famous. It's called augmented AI. So basically, you use human and AI model, but you have to use it together. It has to be together. And whenever there is, we expect that decision is not confident enough by AI, we ask humans to give the feedback to the model so that they both learn from each other. So that's the new thing which is happening in the industry. Other than complete automation by AI, that's not possible at the moment, I would say.
I'll make an argument that supports this, which is when you combine ethics and empathy and emotional intelligence, most of the full end-to-end experiences actually require some aspect of human intervention. And to design it appropriately, we need to identify that moment where the human has to intervene. The other thing that you mentioned I found really interesting and sort of justifies my personal existence in choosing my work is that the data is incomplete. And it's precisely this is why, to me, open data actually matters. Because if you're starting to open up data sets that are related to vulnerable or underserved or marginalized communities and demographics, you have a very different lens. When we started to look at micro-lending, for example, we see that women, and specifically women in communities of color, actually have incredibly low probability of default when they are lended micro amounts in order to do small business, very small business, that they have 100%, near 100% payback rate. And yet they have an absolute absence of credit history. So when you start to actually ingest information like this, it fundamentally changes the model, because you're getting an actual risk, a real risk profile. The funny thing is, this entire industry is risk. All we do is price risk. That's all it is. Very straightforward. And yet when we're missing fundamental information about risk behavior, we're excluding extraordinary swaths of people. So what if we started to open up very different data sets? Some are held by government. We look at HMRC and say sole proprietor or freelancer tax information. We actually see a very different position for them when we start to look at access to credit. And Mark, you were talking specifically about some things that we need to do is improve access to credit across all sorts of communities in order to actually build wealth, build businesses, or even access money to give a small business a little bit more runway. This is the interesting thing, is if we start to look at data sets, what other data sets should we be considering that would be materially impactful that you're starting to recognize in your work?
Yeah, so to enrich this data, so one is, of course, you said you can open up a lot of data from government. Another thing is like open finance we have. However, I would say with open finance, it is completely consent driven by customers. So if the fintech, suppose the fintech wants the data of a customer, they need to have a consent. So that's not very easy actually.
Well, if you actually set up the value proposition and you
Yeah.
say, listen, if you share this particular data with me, in return, I will provide this service. Here is the fair value exchange.
Yeah.
It's actually up to the fintech to be able to, or the institution to be able to articulate that. But that's on us. And I think it's an easier problem to fix. But consent, I agree, consent is critical.
So what we have observed is digital banks, they get more customer consent than retail banks. It's very hard to understand why it is happening to them. They are getting more inflow of data and retail banks are not getting more inflow of data. So that's one thing we need to look like in the future when their open banking API has just started. But nobody, there's a lot of data is being transacted between banks and fintechs, but the complete utilization hasn't yet happened. Actually, we are just using at the moment these kind of platform only for payment services. But I would say that, of course, if the data has been, a lot of data has been transacted, we can, of course, make some AI model, decision-making model as well. That hasn't happened. We are still thinking how to do that to enrich this kind of data.
And fair enough, the legal framework is not yet live either for that. So we're working on it.
We are going to have PSD3s very soon. So I hope there will be good legal framework for that. Yeah.
Well, they're working on the payment service regulation, which is an interesting thing because it does actually take, so for Europe in its entirety, for anybody who isn't aware, a directive is a suggestion and it can be open to interpretation for each of the regulators. A regulation is a standard, consistent, uniform approach. There cannot be a deviation. And we're looking at a new set of payment service regulations, which are actually expanding to include beyond payments. And so we'll be seeing regulation come through in the next 2 years. But what it will actually change is reciprocity. At the moment, fintechs don't have to share their data with the institutions. We're fixing that. We've learned. And in order to build an entire market that works, reciprocity of data exchange actually matters. So it's interesting when we start to look at different spheres. I want to think about how this all sorts of interrelates. Gary, you asked Mark a particular question around greening up an entire impact investment portfolio. What else are you starting to see from an accountancy and small business perspective that's having bigger impact, a wider impact than you might anticipate in terms of not just ESG, but general social change and progressive issues?
The biggest thing we've seen is where you have a CEO who thinks he knows his business through figures and maybe through the people. But what he doesn't really understand is the day-to-day activity. And when you present it in carbon terms and in an environment where it'll affect his business, it opens up a whole new conversation, which it's a bit of a drop mic situation for a lot of companies. And so when you get into that conversation about, well, what is this going to mean for our business going forward? You're not just looking at the balance sheet in the parlance of what we talk about is called double materiality.
Define that for everybody.
So double materiality is when you start looking at, rather than just your balance sheet, you're also looking at the environmental, social, and governance impact upon your business. And you start weighing about what are the risks that these situations can pose for your business at a fundamental level. So for example, if you have a weak governance structure, it's pretty evident that your business is going to fail. If you have a weak governance structure under a sustainability agenda, your business is now going to fail. If you look at the environmental impact of your business, so you look at it not just as a risk, but also as an opportunity, because that's the way you have to turn it around in your mind. It's not just about, oh, we're all doomed. There are opportunities out there for business, particularly in the financial sector, on where they go and how they project themselves to customers and to stakeholders and investors. That's the big thing. The conversation changes. So they start talking not just about what's money coming in and money going out. They're also talking about, well, what carbon are we putting out there and what carbon can we take in and how can we change our activities to reduce our carbon? Because that's fundamentally what we all have to do. We have to start doing we have to start doing more with less. And that's where AI could come in, I think. So the conversation changes, but from a financial point of view, the directives and some of the fundamental mandatory obligations now are coming from the financial sector. So IFRS 2, which is the International Accounting Standards Board, they basically issued a equivalent sustainability reporting framework. So in Europe, for instance, in Sweden, they have to report against what's called CSRD. In the UK, it's SDS. In America, it's the SEC. In China, they're doing it. In India, Singapore. It's permeating through all our society. And for some of you, I think, what that's got to do with me? Well, somewhere down the line, you're going to be asked to ask what your sustainability agenda is. And that's the cultural change that I'm seeing. Unfortunately, I said earlier, we're running out of time. There are only a small amount of companies doing it. And we estimate there's only about 5% of companies in the UK which have actually got an active ESG policy and are driving it forward. 5%. That is woeful. And I'd ask you as business entrepreneurs, what could I do? Well, you can all make a difference. It might sound like it. I often hear this thing where, why should we do things? Because China's the one that's got all the problems. Well, actually, I'd just say to you, pick up your phone and see where it's made. And then say if China's got the problem because you're causing it, because you're buying a phone made in China. So look at it as your own challenge and that of your business and the finance sector. Because somewhere down the line, I think the finance sector are really going to, the FCA put a lot of regulations in for the big banks, haven't they, on how they invest and what they're meant to do. Barclays have suddenly announced they're not investing in oil anymore. Well, I don't quite believe that. I'm sure there's a way around that, to be honest with you. And that's a question I'd have for likes of Matt and other businesses in the audience, and ask them, do you knock back business because of its environmental credentials or lack of them? Because that's the challenge that I think people face. We work with some sports organizations around the world, and they are constantly battling between, oh yes, we want to be green and sustainable, but we still want Emirates to be our main sponsor.
Greenwashing is a real thing. Actually, that is one of the things that there was an FCA tech sprint late last year. Sorry, I was a judge in it and a mentor for it. That was actually looking at individual reporting and using technology to identify the moments of greenwashing, whether or not something is accurate or authentic or really measured. And actually, this is the interesting thing about regulation and supervision, is that we're also looking at reg tech and sub tech driven by mostly machine learning AI in order to help supervise and start to be able to flag so that we can do some enforcement. And that may be where FinTech / RegTech / finance sector has some really interesting moments of intervention to start to change. I think we're running out of time because we could be talking about this. Like I said, there are certain things that we can talk about ad nauseum. A, they're critical. B, we have to be aware of them, and C, we actually have a moral obligation to invest in these conversations because it does actually affect our ability to live productive, fulfilling lives. And in context of finance, because we're having to finance every moment of our life, it actually does touch us at each and every choice. I want to say thank you to Gary and to Mark and to Swati about bringing some insights to this. Also for reminding us that there is something bigger than the immediate day-to-day problems that we face, even if we're running our own businesses, building solutions, or trying to build ecosystems. There's some things that are bigger than us that we also have to contribute to, and that we have an obligation to be invested, in part because this is the legacy that we leave behind, and we're also going to be affected by it. I literally just think of 10 years' time and what the difference is in the air that we breathe, the water that we do or don't have, the sewage that goes into it, the supply chain, the ability to get fresh food in because we've got shipping containers that can actually make it into dock. Or how are we going to start? I mean, our lives are fundamentally going to change if we don't start thinking and acting on the bigger picture individually, collectively, and by the choices that we make to support the companies that do, like you say, impact investing, that actually do make a change. This has been an interesting hybrid of a moral soapbox, and it's very indulgent. Thank you very much, but also insightful. And I appreciate each one of you and your contribution. Join me in thanking them.
Yeah, thank you. Thank you from us. Thank you, Geller, as well. A very thought-provoking and knowledgeable panel discussion. Ryan, it's time for the pre-break. Cameo from Ryan.
Yeah, so what a great session. Again, that wraps up the first afternoon session. We heard from Chloe, Joanne and Jordan, the fireside chat, tackling a really important issue. So Chloe, congratulations on your publication and all the great work that you're doing. Obviously, we're delighted to provide a platform for female voices to be heard, and it's really important, so thank you very much. And thank you to the co-founders of Fan and Shale and Claire. I felt like that was an episode of The Vault live, really. So yeah, really enjoyed that. Great energy, and obviously, of course, the panel that we've just had as well was brilliant, obviously tackling how FinTech can impact societal change. Little networking break now for half an hour. I think we'll give it till around 3:20, I want to say, that's right. And then the last session is our popular FinTech showcase, where we'll provide a platform for, I think, around 14 FinTechs to come up on stage and share their propositions in a short, snappy, sort of Dragon's Den style pitch. So yeah, join us back in here at 3:15, and thank you again.
Awesome, right. Welcome back to the final stretch. Thank you everybody for sticking with us for this part of the day. You know, if you've been before, you'll know this is one of our favourite parts of our conferences, the showcase. So I'm going to be helping to facilitate this. We've got Oliver from Galibier, our long-standing PR partners. Oliver, give us a quick intro.
Hello, nice to see you all. Thanks very much. As Julian says, it's great to see people sticking around and supporting this part, because this is the exciting, this is the fun part of the day. And also this is that kind of supportive community spirit, the vibe of FinTech North that I love so much. Yeah, I'm Oliver Cheshire. I'm the founder of Galibier. That's my brand up there. We are the PR firm that's partnered with FinTech North since day one. You might ask, why is there a PR man hosting this showcase bit? Well, I suppose the message from me is, first day of PR school, the sort of storytelling principles are what kind of apply to this, which is whether you're pitching a story to a news editor or you're trying to lobby a policymaker for wholesale change, you've got to be able to tell your story convincingly and compellingly in as few words as possible. And that's the spirit of this session. Julian, do you want to talk through the rules of how that works?
Yeah. So we're basically, we have 13 people who are going to pitch. That's quite a few to get through. So time management is absolutely critical for you, but also for us. To help you, after 5 minutes, once you've been talking for 5 minutes, the lights are going to flash red. I don't know, Chris, can we do it now? Yes, can you demo that? Yeah, that's the 5-minute warning. Okay. And then this timer is going to be on here for 6 minutes on the side. So once you can glance over at that while you're speaking, and you'll see when you've hit 6 minutes. If you finish with that time, there's time for a question. If you run over, then we will have to not too subtly tell you that you're running over, and you'll miss the chance to have a question. So yeah, it's high pressure stakes, but it's fun. And it's just really important that we keep to time, because what we don't want is people still needing to, not having spoken, but people needing to leave to go home. So,
and I will not hesitate to interrupt. Yeah. And sometimes it gets nasty.
Right.
Right. So without further ado, should we crack on with our first speaker? We've got Tom Woodruff from Mutual Credit Services. I assume we're still running to this running order, Julian?
That's right.
In which case, Tom, please take the floor. Everybody welcome Tom, please.
Oh, I've started it. Hang on. I've started it too early, Tom. There you go. Right.
Thank you, Julian.
There we go.
So I am Tom Woodruff from Mutual Credit Services, which is the lead organisation in local Merseyside. As you can see, we are. Thank you. A whole group of organisations, and we'll shortly be able to add another logo to this, because we found out yesterday that we won a £345,000 Innovate UK Smart Grant, which is going to put. So we're going to be moving faster and being more ambitious than we were before. Just a quick bit about ourselves. I moved to Liverpool in 2014 in order to do my PhD in applied nuclear physics at the University of Liverpool. And my co-founder is Dill Green, and he's an architect and an expert in pattern language. And although neither of us are from a traditional finance, money, economics background, we've kind of become known as leaders within the emerging collaborative finance space.
And I hope I'll give you a bit of an idea of what that entails over the next few minutes. What we realized a few years after setting out was that the financial sector has some extraordinarily powerful tools for managing cash flow and late payment risk. And we realized we could make these tools available to the ordinary economy of SMEs and community groups. And that's our mission, starting in the Liverpool City region. But what do we actually know about the economy? It turns out actually not very much. We think there are kind of two dominant lenses. There's the microscopic lens, represented here by a company's balance sheet, and there's the kind of macroscopic lens given by government statistics, GDP, employment, all those kinds of things. And actually neither of them are at all empowering. We think there's a kind of missing middle about the dynamics of interdependent trading networks at the kind of local and regional scales. And so that's what we have set out to do, is we set out to fill in this missing middle with these collaborative finance tools. And in particular, we know that late payment is driving many, many firms to insolvency. And it's not really hard to see why, because even in a really simple situation, you have a chain of 3 payment obligations, 2 payment obligations between 3 businesses. You can see here that Mark can't pay Eddie until Sarah has paid Mark. But it can actually get worse than that. If Eddie was to owe Sarah, you'd go from a blockage into a full-on logjam. It's not hard to see here how nobody can pay until they've been paid. And so late payment is a systemic risk in the economy, which can be understood through network analysis. So it's, even in really, really small trading networks, it's not surprising that these gridlocks are completely endemic. This is some empirical data we took from a survey in Lancaster, and you can just see the complexity which starts to emerge very quickly. And so we live with fear, uncertainty, and debt. But actually, with this network lens on the economy and a willingness to collaborate around sharing data, we can actually start to imagine how to resolve some of these payment gridlocks and ease up local economic conditions. And we use various techniques we refer to as network FinTech in order to do this. And again, this is based on techniques already in mainstream use by the financial sector. And we're bringing this to market through the Local Loop Merseyside app. We're going to be launching that later this year. And the outcomes of this are for individual businesses, cash flow. For communities as a whole, there's a community wealth building effect, keeping money local, reducing the reliance on the financial sector, reducing reliance on invoice factoring firms, et cetera, et cetera. And there's a kind of circular economy implication here, in as much as we can create very strong incentives to trade locally in circular patterns. And we are launching this year, and follow us on LinkedIn to see our progress.
Thanks very much, Tom. Brilliant timing. Thank you. Lovely, lovely and snappy. Any questions from the floor? We have a roving mic, but equally, I'm more than happy in this small and intimate gathering for people to just shout out.
You asked the first one, Oliver.
I do have one. I mean, as a founder of a small business, I obviously feel the pain that you're describing. So this is very emotional to me. And of course, we met before at the Manchester conference. I'm interested in what your revenue model is. Where's the profit going to come from? Is that purely from scale, or can you explain that?
Yeah, it's software as a service. We're going to have a kind of tiered pricing model where the first tier is just going to be a kind of business networking proposition that'll be open to everyone, really very cheap. For those businesses which we know are going to benefit from the financial mechanisms we've got, we're going to kind of invite them into an upper tier. And of course, there'll be an increase in the price point there, but also we'll take a percentage of any debt we clear. And actually, we think that even with a network of a few thousand businesses, we could get this network to break even. And then our business model is to become a franchise and roll this out nationally. And then, not going to get too far ahead of myself.
Lovely. Thank you very much. Brilliant. Thank you, everyone. Please join me in thanking Mark. Sorry, not Mark. I said Mark. I meant Tom. Sorry, Tom. I gave you the wrong name. Gavin Sherratt is next from Tenet. Please welcome Gavin.
Becca's there. All good?
Hello, everybody. I'm Gavin, and I'm from Tenet. Tenet is a property management portal, but it's all about the original circular economy. We've got to look at that people's homes are the things that we constantly recycle, and lots of landlords don't actually look after those assets. So we want to transform that process. But what we have to look at is the economy of the UK with like rental houses is worth £48 billion from single landlords through to social housing providers. It's a massive chunk of what's actually going on in the world right now. But if we look at it, it's actually chaos. There's so many different things that people are involved in property have to deal with, from tenancy agreements through to viewings, through to kind of financial governance, through to kind of your liabilities with gas and different safety elements. So what we want to do is we want to create a system that manages all this all in one place. It was interesting earlier that we were talking about different data streams. We want to kind of control that from one singular place, but have those streams coming from multiple different places, because you've got people living in HMO homes where you've got multiple tenants in there. You've got different people living with different lifestyle needs from different ways that they pay their rent. So it becomes very, very complicated. So what we want to be able to do is simplify that, keep it simple, put the control back into the tenants, but also give the landlords transparency of what's going on. So with that, you've got different things that are going on inside the property, but actually, a lot of those problems are the same problems over and over again. So we're building small little AI engines to deal with simple issues. There's conversations with some social housing providers that we've had that have a problem when the temperature gets to -4 with 10% of their boilers. We can preempt that by monitoring weather data to kind of allow their tenants to give them the actual interactions to change those settings on those boilers before the problem happens. They're doing a retrofit program, but that takes time. So let's help the tenants through the different ways. So using bits of AI will change the way that we communicate and the way that people's homes actually become better. We're also looking at different ways of managing transactions as well. Obviously, we've had conversations about kind of open finance, open banking today. We're looking at that as well, because what we want to be able to do, again, similar to kind of what Mark was talking about, getting people paid quicker. So if you've got a maintenance person fixing a broken toilet, why can't they be paid quicker from the landlord? By using certain open banking transactions, allowing certain aspects of the rent that's been paid to go into maintenance, it transforms that economy. It means things happen quicker. It means that homes are looked after better. So what we want to be able to do is, like saying, streamline all those different processes. And then we have this lovely world that my dev team hates: double entry accountancy. We're in a world where the lovely folks at HMRC are putting the microscope on landlords, and in 4 years' time, every landlord is going to get scrutiny on every investment that they put into that property. So we're kind of working on kind of zero-style accountancy processes in the background of our system, so that even if it's just changing a lock on the door, the expenses are recorded in the right and proper way, so that when the landlord gets inspected by HMRC, because it's going to happen, I think 20% of all UK landlords will be inspected within the first 4 years. Their data's in order, and that's a big, big thing. It's like data is a massive thing that we've been talking about for the whole of today, so massively important. We're at the beginning of what we're doing, but we have a scalable MVP. We've got several landlords already using the platform, but I want to onboard more landlords. I want connections into networks where we can talk to more people. We're giving the products away for free at the moment because we want to test. But speaking with landlords, through to social housing providers, speaking to legal professions, mortgage brokers, insurance brokers, they're our gateway to our customers. But we're also a gateway to revenue to those people as well. We're raising £500,000 at the moment. We've been self-funded. It's been a rock and roll ride so far, but we're at the beginning of what we're doing, and we want to unlock how these houses are managed.
Love it. Yeah. Thank you, Gavin. Selfishly, I have a question I'm gagging to ask, but before I do, anyone else would like to throw their hand up? If not, I'm going to gag in straight away, as they say in Liverpool. Oh, go on.
I can't.
I want the gossip on HMRC. I want to know if you've had any feedback from HMRC yet. I'd love to know what they think about this.
Not yet, no.
Okay.
We've been going around lots of housing forums where lots of accountants and tax experts have been kind of warning the landlords about it, especially those that are doing maintenance on the properties. So the record of that information, lots of people are just putting stuff in folders and in spreadsheets, or they are using like a Xero or Free Agent as a popular one, but the detail is going to be there because obviously they're not getting the tax advantage anymore from the mortgage payments. HMRC, and I think the government, the current government, want mega monolithic landlords, not individual pension pot landlords. But half of the housing stock is owned by single individuals, and they have one or two properties.
It's a hell of a market and a completely unique proposition. I love it. Thank you so much for joining us.
Nice one, Gavin.
Next, we've got Shazma from Qualcomm Consulting. Please welcome Shazma to the stage.
Ready? Ready? That one, I think. Is that working? Yeah, there you go.
Hello. My name is Shazma Astle, and I'm the Strategic Partnerships Consultant for Qualcomm Technology Academy. Qualcomm Technology Academy, we source candidates that are from various diverse backgrounds. Can't hold everything at the same time, sorry. So we're an inclusive, we source inclusive candidates from diverse backgrounds, and we provide them with training and then deploy them into the tech sector. 21% of senior tech role holders are women, and only 29% of UK tech employees are women or non-binary. 25% of UK tech employees are from ethnic minorities, and only 5% of those are Black, and 22% of software engineers are from ethnic minorities. 3% of tech employees have disclosed that they are neurodivergent. However, we know that 39% of the UK population are neurodivergent. 6% of tech employees are disabled. But 23% of the wider working age population are disabled. %39 of UK population are from lower socioeconomic backgrounds. Sorry, I think one of my slides is missing here. Apologies. Only 0.17% of people within tech identify as trans, but we know that only 4 in 1 UK tech companies are measuring trans identity in their workforce. So what we do is we work with companies and organizations. My role is to partner with small, medium, and large businesses within the UK. They could be startups, scale-ups, or established businesses. We look at what their needs are. So they could, this is one of our case studies where they required test automation engineers. We hired 6 associate consultants for them. We sourced them from diverse backgrounds. We provided training for 2 weeks of core tech training, followed by 4 weeks of testing, programming, and automation. And then we deployed them within 9 weeks as fully trained test automation engineers. So Qualcomm Technology Academy, we've been going for about 2 years now. And we're quite proud of our statistics. These are our statistics for 2023. We've got a 50-50 gender split male-female. 66% identify as Black or from ethnic minorities or Asian. 17% of our associates identify as being neurodiverse. 50% are from low social mobility backgrounds, and 17% are career changers. We work across the whole of the UK, and we're a values-led organization. We believe in equitable opportunities, and we exceed the expectations of our clients. We believe in succeeding together. We celebrate our differences, and we strive to continuously improve. And our USPs are that we create equitable opportunities and put diversity and inclusion at the forefront of everything that we do. We're backed by the Department for Education. We provide flexible service delivery models and bespoke practitioner-led training. And most of all, we're small enough to care, but we're big enough to deliver. So if anybody wants to talk further on this, my name is Shazma Astle. I'm also on LinkedIn, and that's my email address there.
Thanks, Shazma. Another fantastic rapid fire delivery. I love it. We're really keeping up the pace here, which is great. Any questions from the floor for Shazma? Julian, if you don't have one, I am interested in, we do a lot of campaigning in the education sector, education and skills. And one of the themes that we're seeing is that even those that are offering more sort of advanced level pathways, you know, levels 5, 6, 7 apprenticeships, are talking about this trend of engaging people from earlier and earlier levels, you know, as far back as level 2. Is that something that you're seeing? Are you engaging with people at a really young age or people that are right at the very beginning? How are you engaging with learners themselves?
So we do a lot of work within our community too. We go into secondary schools, into colleges, and make them aware of the opportunities that are available to them. I think that's really important. I remember when I went to school, I didn't really understand what tech was, and so I never leant towards that way. But we are finding there's a good mixture. So I transitioned into tech 2 years ago after 23 years in hospitality, from a very senior position right into tech, and started right at the bottom again. But we're finding a real mixture. But it's good to see that despite we have some graduates as well. Am I going over?
No.
We have some graduates as well, and that they may not have a computer science degree, but they're quite willing and quite passionate about getting within the tech industry, because there's so much options and roles available to them within this industry.
Brilliant. Well, thank you. It's lovely to see decisive action being taken. Thank you so much for joining us. Everyone, please join me in thanking Chelsea. Next, we've got Becky. Those of you who are with us in Manchester may remember Becky, who we've already met. A lot's changed, I know, since last time we were together, Becky. So please do update us on what you've been up to.
Thank you.
Everybody, please let's listen to Becky, and we'll have some questions afterwards.
Thanks, and good afternoon, everyone. I'm Becky Baker, and I am the founder of SeatSafe. I'm going to make a risky move and just take a minute at the start of my segment to say a massive thank you to FinTech North and the team. I'm completely new to the FinTech sector, and the opportunity to come here today for both an educational perspective, networking perspective, and then to get to talk about my business idea is incredible and invaluable. So thank you to the team. I hope I'm not going to punish myself for that later with my time. So I'm sure the image on screen is pretty familiar to a lot of you and will probably make some of you shudder and cringe. It certainly does me. If I was a betting woman, I would say that everyone in this room at one stage or another has been asked to hand over their email address when they're making a restaurant reservation, purchasing something online, and even now in the high street when they're shopping in store. I'd probably double down on that bet and say that when you have been asked for your email address, you've paused, you've hesitated and thought, oh, don't really want to give this. Can I just have a paper receipt? Or just dreaded the thought of what's going to fill your inbox once you have handed it over. And that is the customer pain point that I set out to solve with SeatSafe. So what is it? It's a direct-to-consumer app that's free to use. And I will just caveat and say we are super early in our stage of our journey, but the premise is that when you register, you create a safe email address to use, and you can then hand this over whenever you're doing any of the aforementioned activities, whether it's travel, booking your holiday, restaurant reservation, concert tickets, buying in store. You use that email address, and then any subsequent emails that are sent to that are received into the app, and machine learning uses that to autofile and pop it in the app, leaving your inbox as free. So what's the benefit of that? Well, first and foremost, it's keeping your inboxes clutter-free. Whether it's your personal one, your work one, you'll no longer get those emails going in there. But then there's the added benefit of taking care of that pesky life admin that we all have, whether it's remembering when your insurance renewals are due, when your warranties are due to expire on your white goods. If, like me, you buy concert tickets when they first come out, you cannot remember which email address you used a year later when you got to go to the gig. So you're searching all your inboxes, trying to find where the blooming QR codes are. It's a one-stop place where you can find everything at the drop of the hat. And it's about protecting you from a lot of the marketing, what people would call spam, that comes into their inboxes. Now, I just want to make it clear that I'm not against marketing. I think it's a really important part of the process of what we go through as consumers. And chances are that if I've bought from a brand, I probably do want to hear from them. I do want to know when they've got a new product launch or there's a discount or a sale on. But the point behind SeatSafe is it's about putting you as consumers back in control of that process. The emails will still be coming to you, but they'll be sat in a folder that you can search at a time that suits you. If I'm going shopping to Currys this weekend, I can go into my app, use my quick search function, type Currys, and any emails that are still relevant, valid, if they've got offer expiry dates on, will show. And then I can use that to my benefit when I'm ready. So We're not looking to completely disrupt the marketing sector. We just want to put you as consumers back in control. So what's the model behind it? As I said, it's free to use proposition for consumers, but we're really confident, I say the royal we, I'm really confident that we will be getting really incredibly valuable data into the app. Consumers will be able to expressly consent to receive their own personalized rewards and loyalty programs. And we're confident that we'll be building a very valuable data asset. Now, this will be anonymized data because we want to protect those consumers, but we're hoping to lift the lid on some of those underserved areas of the market where data is typically quite difficult to get at. And I think it's important to point out that the data we'll be collecting won't only be at a transactional level, but it'll be what I learned last night is the technical term for it, level 3 data. Thanks to Joanne, who was speaking earlier, taught me that. So it'll be that level 3 data, the actual product itemization. So it'll be giving really detailed insights. And what you have to remember is we're payment method agnostic. So whatever the card is you've used, even if it's a cash transaction, if it's slightly higher value, we will still be collecting that data. So it'll be incredibly valuable, or at least I'm confident that it will be. Here's just a little idea of where our product roadmap looks at the moment. I do have plans to partner with an existing provider who has the receipt scanning technology, so we'll be able to lift all that data out rather than have to start from scratch building that technology ourselves. We've been spending a lot of time in this particular phase of the process trying to understand the high-level consumer pain point, but it's important to us that we really understand that use case and get our product market fit. As I say, we're really early stage in our journey, and I'm just looking to have interesting conversations with those that are already in the sector, just to talk about potential future strategic partnerships and general feedback. So thank you very much.
Thanks, Becky. There's another reason why I love this idea. If my wife saw in my inbox how much money I spend on menswear and sports equipment with online shops, I'd be in trouble. This is a way of hiding that. So I'm very interested. I do have a question, but again, obviously I want to give the opportunity to the floor. I can't see anyone. If anybody does have any questions. I suppose the question I would ask, Becky, is obviously it's been probably 6 months since we last saw you and you updated us on your plans. And what's changed since we last saw you?
I think from an external perspective, not a lot, if I'm honest. But as I said at the start, my learnings are they're really valuable for me entering a whole new sector. And I've spent the last few months doing a lot of research on the consumer side and analysis of what that early stage use case will be, but really trying to understand the market. Thanks to FinTech North particularly, I've been connected with a lot of people in the industry who've been very generous with their time, had conversations with me, and just helped educate me on where the possible revenue opportunities might be for the business-to-business monetization side. So nothing externally, but a lot behind the scenes to watch this space.
Thanks so much, Becky. Thanks very much for coming back. We've got Phil Benson next. Phil, correct me if I'm pronouncing the name of your business wrong. I've got Lokio. Perhaps you will elucidate. Thanks very much for joining us, Phil.
Thank you. You should do it, yeah. Hopefully tested it.
Good to be here. Is that working? Good to be here. My name is Phil Benson. I'm an entrepreneur and founder of Lokio. So in the drinks industry, we see there's a wide range of different categories, combined looking around £15.4 billion market. And we've seen a proliferation of new independent producers in a wide range of different categories. I'm from Yorkshire, and we've got a lot of wine growers in Yorkshire now. And so the market's quite fragmented. So for me, I wanted to look at how do we bring that together, showcase the best of independent, and make it easier for consumers to buy this online. That was supposed to be a video. But
I think what makes us special is our passion for what we do, and I'm just trying to make a good product. Only self-built gin and whiskey distillery in the whole of the UK.
We sort the world really for the very finest coffees we can find. Everyone knows everyone else. It's a great close-knit team.
And our recipes aren't put together by anybody for a purpose of a taste. Our recipes are put together by a story or by history.
Striving to really be always improving the taste from different batch to batch. But we decided we wanted to do something different. We wanted to actually redistill.
Use things like Yorkshire lavender, we use our own honey as well, our own beehives.
Help for your president and for other local companies just to come together and have fun with it as well.
Our coffee roaster is the most environmentally friendly roaster in the world.
Where they'll ferment for a week or two, condition it, and then package into can, keg, and cask.
It's that skill, it's the craft, it's the people.
I'm looking forward to see what happens in the future.
So I've created a marketplace which brings together local independent producers. Currently, we've got about 40 different local producers online. We showcase the story, make it easier to buy those products online. And we also got experiences where we do things like vineyard tours, distillery tours, those sorts of things as well. And the idea is we want to really bring together all local regional producers, make it easier for you to discover, buy new things online. And as part of this project, I've been working with Matt from Variably. So he's going to explain some of the work that he does and how that also ties into some work I'm doing.
Thanks, Phil. Yeah, I'm Matt Holdsworth from Variably. Our story starts with building a system for a circular economy. So imagine a world where everything's connected. Every product that you buy is connected, and you can simply tap it with a mobile phone and be delivered information about that product. And I'll show you that in a moment. We track everything from raw materials all the way through to products in the end. And that's where we start working with Phil and all those brands that you saw in his video there. Each one of those brands has a particular story to tell. And telling that story, as was inferred right at the start just now, that's marketing. That's about talking to people about who you are and what you're doing and why you're doing it, and giving your own kind of slant and your own picture on what's happening. So although we started building a system for the circular economy, actually what we've developed in this is a technology that is magic. So it's not going to work very well because you're all a long way away, but I have a cheap Android mobile phone, the cheapest one that I could find on Amazon, and I can simply tap any product and I can have content delivered to me. And using that kind of delivery of content, we can start building engagement with people. And through that engagement, we can actually then start doing things like challenging the status quo. So all those brands that were on Phil's Lokio site, they're all micro producers. What our system does is it enables them to kind of disrupt the economy, the marketing economy. It allows them to play on the same stage as the big Diageos, Glenfiddichs of this world, and start their own engagements. What we've developed as well is a tokenized reward system based on our blockchain. We say that it's like Nectar points on steroids. So Nectar points kind of rewards you for buying things. What we do is we reward you for doing much more. We reward you for that engagement with the brand. We reward you for following them on social media. We've had presentations about data and the value of the data. The data is actually yours. It's mine. It's all of ours. Your name is yours. And actually that has value. And why shouldn't the brands be paying you directly for that? So that's what our system does in a quite a very quick and niche system there.
So as we can see, the future of marketing is going to change. We're seeing with AI, Google, the incumbents are all going to be disrupted. And actually, it's having that ownership economy where we get in touch with the customers directly and we showcase the value that they can bring, and we can reward them, and they engage with these brands with products which they really want to in a way which is going to be beneficial to them, to the brand owners as well. Thanks very much.
Thank you both. Unless there are any questions from the floor, I'm very interested to see, obviously, the community of northern brands represented there. What's your sort of geographical ambitions next on your roadmap?
So currently we've got 40 producers, and that was our sort of test market currently across different categories. around 350 SKUs. The idea is I want to, there's over about 3,500 microbreweries. There's probably approaching 900 distilleries. There's, English wines really coming on the up and up. Yorkshire wines now well into its double figures, where we're actually growing grapes on, in Yorkshire, making some world-class wines which are competing with, the likes of the Champagne regions and things. So we've got some really exciting stuff, but the idea is to show to really scale the whole of the UK, all the independents, as many as possible, and that then gives that's how we scale the Locio platform, because there's enough on there to go at, and it also helps the local producers at the same time.
Fantastic. I'll grab you afterwards because my coffee dealer would be fascinated by this. Thank you very much. Lovely to meet you.
Guys, thanks.
Who's next? Nicola Gleave. Welcome back, Nicola, from Worn by Us. Nice to see you. Thanks for joining us. All good?
Hi, everyone hear me? So thank you. I'm Nicola Gleave. I'm the founder of Worn by Us. Worn by Us is a fashion resale business, and we exist to provide fashion resale solutions for consumers, retailers, and brands. Our aim is to help to keep clothes in use for longer, because that's best for the planet, and to support sustainability and a circular fashion model. So who are we and what do we do? We work with consumers who have unwanted clothing in their wardrobes and are not selling it on, and are sat there, don't have the time or inclination to clear out wardrobes and go and list it on your traditional platforms like eBay, Depop, Vinted, etc., because it takes a lot of time and effort and a lot of hassle. So when we have our regular clear outs, those items go back in the wardrobe and they sit there and they come out again and go back in. So we're looking to tap into those unwanted clothing and help to provide a simple, straightforward service. We work with fashion retailers who maybe sat on end of season stock or customer returns. And at the minute are providing maybe a very reactive approach to what they do with unwanted clothing. And our aim is to work with retailers to help them provide more transparency in terms of their movement of unwanted stock. So we provide resale solutions by reselling items on our website. We provide then a breakdown of data and information back to the retailer about what has happened to each item, the price it was sold for, where it was sold. And that starts to help retailers think of different solutions rather than the typical jobbing model, which sees items bought in bulk and typically shipped overseas. We also work with retailers to provide customer resale services. So to support them in their sustainability strategies, to help them to have a responsibility to their consumers. So helping their consumers to think and act and behave more responsibly once they've bought an item from that brand and they've worn it and they no longer want it. To be able to support them and encourage them to resell it on. And some of those models are incentivized by the retailers to provide discount vouchers as a thank you for using the service. Some of the retailers also choose for a donation of the resale value to go to a charity of their choice. So why fashion resale and why now? The timing couldn't be more right for this kind of model. Second-hand clothing market is growing 11 times faster than traditional retail. It's estimated to be more than double that of fast fashion at $84 billion by 2030. 33 million consumers bought second-hand fashion for the first time in 2020. And only between 5 to 7% of unwanted fashion is currently resold or bought on resale platforms. So there's an estimated $2.1 trillion of unwanted clothing currently sat in wardrobes, which have a value to it. So we work with a range of retail partners, which ensures that our platform, our website, provides a choice of quality brands
and a choice of real quality at different price points for conscious consumers who really want to have a simple and straightforward way, a go-to point, a go-to site to be able to feel confident and trusted that they can shop brands at great prices, at quality choices. So some of the brands that we work with at the moment, we work with Henry Lloyd and also Sosandar on that customer resale scheme that I mentioned. And they are supporting there through simple email marketing and social media messaging, letting their customers know about our partnership. And the customers basically come directly through to us and we do the rest. They let us know how many items they've got. We send them out some bags to fill and they send their items back to us free of charge and we do the rest. And then they receive money back in their bank account once the item is sold, or they can choose to donate to charity. We've worked with a range of other brands, as you can see, either through commercial models. So we work with M Brown Group at the moment. And whereas typically brands are reselling overseas, we're encouraging them to give us stock up front. So it's a very low risk model for us. And then we resell it on. And so that's us, Worn by Us. We are looking for investment at the moment. So whereas I'm not that bad at getting in front of those brands and persuading them to part with their stock, as you can see, really looking for support around taking forward our e-commerce platform and also digital marketing support. And thank you.
Now, having already outed myself as a fashion consumer, I again am biased and have questions. So if nobody else wants to interject, you mentioned the time-saving aspect. Let's say hypothetically, I had bin bags full of trainers that I don't want to bin, but I don't have time to put them on eBay pair by pair. What's your time-saving model?
Yeah, so literally you can just get in touch with us on our website. Tell us roughly how many pairs of trainers or how many items you've got. Hypothetically. Unless you want to own up to that. Unless you want to, and then we'll send you some bags out to fill, prepaid postage labels, send them back, and we do the rest. So we do all the research in terms of what the price points are for those items to get you the best value and the sales in the best time. We do all the listing checking, and if some items, you know, kind of are damaged slightly or whatever, we'll aim to get things repaired so they're resellable to ensure that most things are sold on.
And do you recycle stuff that isn't resellable?
Yeah, so we work with textile recycling partners and we work with a couple of social enterprises whose approach is to support employability skills by helping people to sew and upcycle. So they will remake and repurpose items from those materials.
Fantastic. Can't fault it. Love it. Thank you very much.
Thank you.
Right, who's our next victim? Congratulations to everyone, by the way, so far on fantastic timekeeping. I'm loving keeping the pace up. And in the spirit of keeping up the rapid fire, we've got Nick Ashton joining us from, again, is it Amicus or Amicis Group? Please elucidate.
Funny you should ask that question. Even the co-founders still argue about how to pronounce the business name. We should have really covered that off before we got going. Thank you everyone for your time this afternoon. My name is Nick Ashton. I'm a co-founder of Amicis Group. Who are, just a couple of points on what our story is, modern day needs in fintech, and how we're helping supercharge businesses in that area. So I set Amicis Group up 3 years ago. Prior to setting the business up, my sort of two main career stints were with a large telco and a large cybersecurity firm. My observation, even frustration working in those two industries and for those firms seemed so fixated on that top 0.1% of large enterprise and central government, but certainly from a risk and sort of cybersecurity perspective, to me it was clear that if you're a threat actor, what are you going to do? Are you going to run that 20-gate gauntlet where these large institutions are well protected, or are you going to go down the path of lesser resistance and aim for a smaller organization that it doesn't have the knowledge, skills, capability, technologies, or general wherewithal to protect themselves, but crucially still own that sensitive IP or highly valuable data that the threat actor would look to get hold of. So we founded the business on core values, and they were based around using cybersecurity as an enabler for your growth, innovation, differentiation, and scale. Our focus isn't about risk-based fear or risk-based activity. It is about organizations understanding if you get on the front foot with your operational resilience and be pulling the strings on your risk strategy, actually cyber can be a tremendous enabler for your growth and enable you to be achieving upon your key business goals. So it is all about simplicity. As I said, FinTech is a big growth area for us. We work with more than 20 different industries now, but in the FinTech space, a lot of what they need when it comes to addressing their cyber risk, there's two main concerns for them really. If we were to be attacked, what's the operational, legislative, financial, reputational damage that we suffer? But then also when we are looking to attend to key stakeholder asks, be that clients or be that regulators, how do we get to that end goal of appeasing them through through A, being compliant, or B, demonstrating a proactive approach to protecting their data and securing them as a client for ourselves. So it just comes down to simplicity. The services that we position and that we deliver are simple to price, simple to scope, simple to deliver, and it just provides that unrivaled clarity. I think as an industry, cybersecurity hasn't really done itself many favors winning over those that don't sit in that space, make it far too technical, far too complicated, far too costly at times for organizations to get on board and recognize that invisible thing of cyber risk can be very real. And if there's clear quantifiables and meaningful actions and valuable output, then it can be seen as something that, as I say, is recognized as a true enabler for their growth, innovation, and differentiation. So, how are we sort of helping supercharge FinTech? Well, it comes down to, ideally, for some of the startups that we work with, just wrap our arms around them from the very beginning. If you're looking to protect a skyscraper, you'd much rather start with the foundations than be having a look at it halfway built and then recognizing that there's problems. So of course we come into businesses and situations that are in sort of all different shapes and sizes, all stages of their growth and development. When we look at FinTech as an industry and the number of startups and scale-ups that are on that early stage journey, the sooner that we can be engaged with them, the sooner we can be understanding and presenting to them what their risks, what their key risks are, how to prioritize them, and how to remediate them, or even better, be on that journey from the very beginning. So we're embedding those important security principles within their build from the very beginning of their development. So that's where we're making the difference, not just in FinTech, but in reg tech, legal tech, etc. And where we want to continue to build that partnership and help those FinTechs on their journey. So that's myself. That's Amethyst. Started from 3 years ago, being bootstrapped, to closing out our financial year coming up in the next couple of months as a 7-figure turnover business, accredited by Crest with technology partnerships from vendors that sit in the top right-hand corner of the Gartner Magic Quadrant. FinTech's a huge industry for us, and the North and Northwest in particular are our main sort of geographical strongholds, with our office headquartered in Exchange Flags in this city. Thank you for your attention. My name is Nick Ashton, and answer any questions that anyone may have.
Thanks very much, Nick. That's an impressive growth trajectory there. What are you most excited about for the future?
I think we've only just recently gone public with our CrowdStrike partnership. The work that we're doing as I've mentioned, FinTech, but private equity is another area that we've got a real stronghold in. So that sort of one-to-many channel is a real growth area for us. I think there's a lot more that we can be doing to accelerate our IP around presenting what risks are to organizations, and yeah, that's a real USP of ours. So I think the CrowdStrike partnership, married up with what we're doing, presenting risk before people are going and panicking and spending loads of money on technology they don't need, is something that's really exciting for us.
Brilliant. Thank you so much for coming and sharing.
Thank you.
Right, the next victim who's waiting in the wings. I've got Leon coming here from PollenPay. Thanks for joining us, Leon.
Hey everyone, thanks for waiting so long in the day. To address the elephant in the room, obviously a Mancunian in the buy now, pay later space. So, you know, please don't throw any bottles. But, you know, buy now, pay later is a bit of a taboo subject, especially in finances. But I suppose the first few slides are all black, and they're intentional black because there's a lot of data around this in terms of, I was, let's say, a young lad from a working class background in Manchester. So first-hand lived experience of what badly financial platforms can essentially do to business. So, you know, rather than moan about it, we decided to roll up our sleeves and do something about it. So yeah, buy now, pay later. What is it? Who are we? You know, some of the questions that probably get asked. What makes you different from Klarna? The vision of PollenPay is much bigger than buy now, pay later. But right now, our core focus is in-store buy now, pay later. So, you know, we did an online version. However, we're looking from an in-store point of view as a bit of a differentiator. That light is really bright. But what's really important about the space is it's not going anywhere. It's not going away, right? So we need to embrace technology and innovation. And what we mean by this is, you know, buy now, pay later is expected to achieve over 1 trillion in the next 2 years. Now, if you think about that as a GDP of a country, it would be ranked around 18th. So again, you know, just to sort of really cement this as a, you know, new way of paying, this is what the trends are moving towards. And obviously, why is this? It's because basically, simply, the landscape is evolving. You know, gone are the days of traditional finance and the large incumbents. And, you know, people are revolutionizing or adopting mobile technology and opting for user experience and seamless ways to transact and make purchases. So essentially, again, as mentioned, you know, we see this with the stats and the information, you know, the decline of credit cards, the use of debit cards, and obviously adoption. And as mentioned in the stat there, point of sale financing is the fastest growing payment sector in unsecured lending. And this is simply put because buy now, pay later offers more flexibility to the consumers that the traditional incumbents can't. And one of the biggest stats there is the reason people opt to use a platform like this is to avoid charges. Now, obviously, the legacy or the old incumbents, they charge for your services. Now, buy now, pay later in its truest form is free to a customer. So if you understand cash flow and cash flow management, essentially it's a free product. And obviously, you know, this is something that we've touched on financial literacy and financial education. You know, I got myself out of the UK a long time ago because it's pretty much non-existent here in the UK. And once you understand about cash flow, you understand it's a lot easier to spend someone else's money if you don't pay interest on it. You know, that's a smart way to make purchases. So the problem that we're really focusing on now after the successful launch of our proof of concept is people got so used to using buy now, pay later online that we forgot about the high street, we forgot about in-store, and we forgot about the smaller boutique shops that obviously can't offer this type of service or that the bigger players in the space don't necessarily offer. So this is something that we're looking to tackle. So let's talk about the positives. There's an absolutely amazing opportunity, and obviously we call it the honeypot. Some of our key sectors that we're focusing on are aesthetics, dental, and optical, which make up around about a £14 billion sectors split amongst the three. So, you know, in terms of an opportunity, there's even the crumbs are small, is what we say. And the way we're doing this is pretty much we created a proof of concept, which was super easy from an experience point of view for customers to search for it, make the purchase and split it. And then obviously within the platform, there was more customizable features that understood and used analytics to help make better financial choices for the customer. So essentially, you know, we want to educate the customer. The way to educate your customers is to actually get customers. And I suppose, as they say, you know, we've got plenty of proof points in terms of the merchants and customers love it. And obviously, the proof is in the pudding. So in terms of our proof of concept, you know, we had to keep turning the platform on and off. So we raised and we VC backed, we raised £21 million in debt and equity. but £21 million in the lending space can run out pretty quick. So with the platform, we kept switching it on and off on a daily basis. We acquired about 610 in-store shops. We achieved around about 25,000 users. Again, £300,000 in our space is super conservative, but it was a great sort of proof point. In terms of proposition and how we're fit for growth, so our target for the next 12 months is 3,000 merchants. We've got a pipeline of about 2,500 merchants. Again, just reiterating, if you're a boutique practice and you're not offering buy now, pay later in your shops, you are missing out on a large customer base. So what are we here today for? Obviously, ask. I suppose we've got it there for 100K. So we're doing a 1.7 million round, pretty much already got it all secured. What I'm really interested today really is the question. So I'm going to rush through this because I'm actually interested in what people think about the buy now, pay later space as opposed to raising investment. But obviously, investors in the room, there's 100K left of SEIS funding, which again, as a proud Northern Mancunians, pretty embarrassing because we need to support these kinds of businesses because these are the kind of businesses that are going to create jobs, and these are the kind of VC backable businesses that investment is going towards. So who are you giving your money to? I can go on for days about the team. I'm pretty embarrassed that these are all male, by the way, but from a diversity point of view, we kind of tick a few boxes. However, two co-founders at the top, Steve and Brian, great lads, known them for 10 years. We all live out in Australia. Both exited businesses, scaled companies internationally. Middle section, team of developers, built large-scale operations, again, globally. Bottom right, Mr. LinkedIn, Alfred, he's the guy behind the successful rise of Gymshark. Sorry, lights are really, really bright. Yeah, perfect. What we're doing right now, generating a bit of a buzz around the UK. M62 corridor, Liverpool, Manchester, Leeds, where we've got our main shop base, obviously going international within the next 12 months. Thank you.
Thanks very much, Leon. I love it. Anyone that comes on this stage and talks about a market in the trillions has some balls, and I enjoy this. This is fantastic. I have a question, again, biased, because running a PR agency working in fintech and financial services, we deal with risk every day. And I'd like to know what your policy is on mitigating and planning for default risk.
Yeah, really good question. I've got to be careful how I answer this if it's being recorded for my investors. Shorter answer is, how do you mitigate risk? Well, the problem in our space is you don't know what you don't know, right? So you need, I love these bingo buzzwords like data. So, you need to lend money to understand what's broken. And obviously that's a risky business. So the truthful answer is until you have enough data points, I don't really want to give an educated answer. And the reason behind that is because I said, I've lived out in Australia for 15 years, successfully exited multiple investments. But when I got back to the UK after 15 years, I didn't have a credit profile, couldn't get credit. But obviously I'm credit worthy. So again, data, credit cards, all this sort of system is very, very outdated. The risk on that associated with that is you stop people like me spending in the country. Because again, we think of buy now, pay later as a subprime lending. It's not. It's cash flow management and financial literacy. And these are the tools that we should be supplying to academics and people that understand this type of thing. So from a risk point of view, the answer is we still don't know.
That's a powerful message. Thank you very much. Thanks very much for joining us. Moving on rapidly, who have we got next? Lucy, our friend Lucy, who we've already thanked for sponsoring the catering and a regular face at FinTech North. Lucy joins us from Intercash.
Thanks, Julian. Good afternoon, everybody. It's lovely to see you all here today. I'm Lucy Mounter. I'm the Director of Business Development and Strategy for the UK markets. Just want to say what a phenomenal organisation FinTech North are, and how grateful we are to be able to partner with them and just meet all of the lovely people with their great innovations that come to these conferences. So I work for Intercash, we're a payment service provider that specializes in payment card issuing. So what we do is we work with all kinds of businesses, anything from large corporates to entrepreneurs, startups, SMEs, and we help them customize and tailor their own card products and launch them to market. We've been running for 16 years now. We initially launched out of Isle of Man, and since then we've expanded globally. We now have offices around the world, based in Canada, Mexico, and also here, well, not directly here in the north, but in Newcastle upon Tyne, so not too far away from Liverpool. Sorry. So just to give you an overview of why somebody would come to Intercash rather than, say, going to the scheme networks direct, like MasterCard or Visa. So it takes a significant amount of investment to set a payment card system up with all the third parties directly. You have to go and get a direct membership with the scheme network. You need to get your own EMI license to be able to withhold funds like client money and consumer money on the payment cards. So what we do is we've already integrated with all of these specialist providers in the card issuing chain to be able to offer a complete turnkey solution that enables businesses to launch their own payment card, do their own card design, send these cards to their customers and enable their customers to make payments on the scheme network rails. So in order to access all of these third-party providers who'd come into Intercash, we would tailor a card program specifically for your needs and requirements, and would do that with very minimal investment. You can get a really speed-to-market launch, so we can set you up in a matter of weeks or even a few months, depending on whether you're doing your own branded card design, and manage all of those communications and connections and contracts with those third parties in the issuing chain for you. Sorry, I keep going the wrong way. I had right in my head. Okay, so this is our prepaid gate back office admin portal. Effectively, this is a complete card management back office that helps you manage your card program from A to Z. So what we do is we set up a specific group for you, tailored to your requirements again in this back office admin portal. And then you'll be able to log in there, go to your own specific card program and be able to check all of the card account data and manage it from day to day for your card holders. You would also have a bank account connected to this system where you would float money, so that enables you to either issue payments onto the cards, or you can do a direct debit card integration with us where you would retain those funds in the float account, and anytime somebody makes a transaction, the funds would be settled from that account. So there's a load model and there's a debit card model. So you've also got the ability to issue payment cards in most places around the world. So that includes the UK and Europe, as well as Canada and the US, Latin America, Mexico, soon to be Brazil and Colombia. And you can also get extensive data reports from this system as well, so understand how consumers are spending on the payment cards. And we provide those reports for you, so you'll have an account manager that will continue to manage the service with you throughout the running of your card program. This is the front-facing card portal. So this is what your consumers will see. This can be fully white labeled, but also we've got a full suite of top-of-the-range APIs, which means that you can integrate all of this functionality to your own mobile app or online platform. So here's a few case studies of clients that we've worked with. How we help entrepreneurs who have their own innovative ideas is really at the heart of what we do. So the entrepreneurs, the SMEs, startups will come to us with their amazing innovations, and we'll give them the card mechanism to help them facilitate mass payouts wherever it is they need to send those payments or who they need to send those payments to. So this is a case study just to give you an example of sort of the global scale capability that we have. So Intercash is very big in the pharmaceutical space. So we work with a lot of providers that carry out clinical trials. They can issue cards to people who are doing those trials. And then after they've completed the tests on site, they can issue automatic payments there in real time to cover the cost of the payments that need to go to the people doing the trials, or whether it's expenses for the clinical professionals. So it's the Visa prepaid card program, but we also work with MasterCard as well. And we do multiple group setup for them. So it works by bank based in jurisdiction. Here's a quick case study of their perfect gift. So this is a local payment card gift provider that has built their own business from scratch off the back of our card issuing system. So they offer consumer gift cards where somebody from the general public can log onto their website and order a gift card for one of their friends or family. Those funds that are on the gift card aren't in a closed loop network, so they can be spent anywhere in the world where they want to purchase whatever it is they'd like to have as a gift for. But they also do this for corporates as well. So gifts for the staff and their clients. And a great social added value that they have connected to this is cashback rewards. So things like grocery cards, you can get 3% cashback once you've become a customer of their perfect gift. And those percentages come off the total annual spend once you've set up whichever grocer that you shop with. That gets paid out at the end of the year.
Lucy?
Sorry, if I could very quickly talk about care and finance.
Well, you can treat this as your question time.
Here.
If you'd like to share another case study, we'll treat this as your question time.
Oh, thank you very much. So another great social added value client that we work with is in the care industry, and they assist adults and children who are in receipt of social care. Some of them can really be struggling, going through an extremely stressful time or terminally ill. They might not want to spend the rest of their time having to deal with complicated ways of making payments for the things that they need to manage their care. So Care and Finance has a system that can manage all of the invoicing, receiving all of the direct payments that come from the local authorities, and they work with local authorities based around London, but looking to expand further across the UK. And it's a wonderful company that's family run, and they've got a card system with Intercash where we help facilitate those payments via a payment card with Intercash.
Thank you very much, Lucy. Thanks very much for joining us again. Lovely to have you with us as always. If you would hand the mic to our next victim, please, Lucy, who I believe is waiting in the wings. Julian's running on, perhaps with some news. Does this mean that somebody's not turned up? I've got next on my list, Sam Thomas. Are you with us, Sam? Yeah, oh, look at that. Sam is here. Welcome, Sam. Thanks for joining us.
Everyone except...
Hello, everyone. Sit down. Right, turn right. My name is Sam Thomas. I am the CEO and founder of Which Menu. Which Menu is the go-to hub, having all the information that one would need when deciding where to eat out. I first came up with Which Menu when I was searching window to window, door to door, trying to find a specific dish. I was Googling, trying to find the dish that I was looking for, a chocolate brownie. Literally, nothing was coming up. There was recipes for brownies. There was, just everything irrelevant, but a restaurant nearby to where I was with a chocolate brownie.
Yeah, have you ever found yourself in a similar situation to Sam, where you might be in an area or city you're not familiar with, or you simply can't find a specific dish you want? You end up Googling like Sam did, and you'll end up in what we call the cycle, where you end up going from platform to platform, downloading PDF menu after PDF menu, or going around the houses. We call this the cycle. So Sam quickly realized he was stuck here, and there was no easy way to find what he wanted.
And that was when Which Menu began. So Which Menu is available on both Android and iOS devices, and our mission is to give customers everything that they need when deciding where they want to eat out in one place. At the moment, like Jamie said, there's no easy way to access all the relevant information alongside the menus when you're deciding where to eat out. So if you're not in it, if you're not on the, if you're in an area that you're not familiar with, and you're looking for a specific dish, you know, it can be tricky. Which menu is currently free for all of our users, and all ages can easily use the app to view the menu, see opening times, check reviews, view any announcements that a restaurant may have on at the time, and book an Uber taxi directly through the app.
We are currently also in the process of upgrading the app to include some new key features. So for our customers, we've got a new UI, which will include things like being able to book a table through the app. You will also be able to order and pay in the app at the restaurant. And there will also be a slew of loyalty features that will entice users to keep coming back to the app, and ways for restaurants to market their app to the customers. Not only that, we're in the process of upgrading the restaurant side to this. So currently the restaurants can create a profile and market directly to their consumers that are favorited their restaurant on our platform. But what we aim to do is to increase this by enabling them to run their entire day-to-day process of restaurant management, from taking bookings from customers on the app to receiving their orders, taking the orders to the kitchen, to serving, to payment, and also managing their reviews as well.
So when we first launched Which Menu, it was a chicken and egg situation. We couldn't have restaurants on the app without any users, and we couldn't have users on the app without any restaurants. So we had a freemium package for restaurants where we signed them up for free just to get the app populated with restaurants in the Liverpool city region. And then we done marketing campaigns, and we done networking events, and we kind of, you know, got more users to start using the app, which made it, you know, more useful for the restaurants. Then we tried out across some of the biggest cities across the UK, such as London, Newcastle, Leeds, Manchester, Liverpool, and a few others. And then we came back to Liverpool to trial our monthly subscription model, which is very successful. We signed on 55 paying restaurants in 30 days or less, with restaurants across Liverpool, some of them being some of the most favorited restaurants. And we had a 100% retention rate across the year.
Also, as Which Menu evolves, we'll also expand from just the model subscription to include a slew of new revenue streams. These include a booking fee, which is generated through, obviously, customers booking through the app, in-app transaction fees when customers order and pay through the app, and also restaurants will be also able to feature their restaurants in paid ads.
So here you can see our growth strategy. It's split up into three main pillars. We've got talent, development, and marketing. Talent, we'll be making sure that the employees hold our values, the company values, the commitment, the dedication, giving key employees a share pool incentive to retain them. I think that's 15% EMI scheme. And then we'll have BDMs on competitive commission plans and stakeable rewards.
And not only the stuff that we've mentioned before about the redevelopment of the app, we're also looking at to continually support the restaurants, continual training on how to get the best use of our platform, learning how to use the analytics that the app platform will generate to make better business decisions, and, you know, ongoing business as usual support so the process stays seamless.
So here you can see on the table, we've broken down all the fees associated with some of the similar platforms to Which Menu. The two on the far left are delivery platforms. They take a large percentage of restaurant take-ins. If you have a restaurant, you'll know about that. Some of them take up to 35% of the restaurant's take-ins, whilst also taking the users away from the restaurant. It stops the restaurants from being able to upsell anything, and it also, you know, kind of tucks into their profits, which is a bit of a problem. The two after that are booking platforms. So they also take quite a large fee per person when someone books a table at the restaurant. The problem with these two, how it's a little bit different, is people already kind of know where they want to eat, and they kind of book on a table for the restaurant, you know, for a special occasion or something. And then lastly, we've got TripAdvisor, which we would say is probably the most similar to Which Menu. Even though it's not bespoke to restaurants alone, it's quite known globally for reviews and stuff, even if they're not reputable and stuff. And they've had disputes for their reliability. So what we're trying to do is implement a new review system similar to Airbnb. So once a user's been to the restaurant, they can then leave a review based on them actually have, attending the restaurant.
Gentlemen, thank you very much. We do have time for questions. I know you've clearly got a lot to share, and thank you very much for.
We do want questions, so if anyone's got any questions, please fire them out.
Yeah, and maybe we will just end on our vision statement, which is becoming the world's largest hospitality hub, and we aim to connect providers, products, and people through cutting-edge technology. And this is us, yeah.
Any questions, anyone?
No. I think the question that
I know you've got a question.
I always have a question, and I know, and I think Julian often has this question in his mind as well, which is clearly you have a very robust strategy for attracting users and restaurants. You're here in the middle of a FinTech community. Who in this room or in the wider FinTech North universe might be the ideal person you'd like to meet, network with, perhaps partner with? How can FinTech North help you?
FinTech North will probably help us with connecting us to people who could work alongside Which Menu. Also investors, if there's any investors that are looking to invest into a startup. We're still in R&D stage, I'd say, even though we've tried and tested it in the open market. We still haven't really gone out full force. So we're kind of looking for people who are interested in we want like active investors, someone who can come on board, kind of see the vision, see what we're trying to do, see how it can help restaurants, how it helps users. Yeah, and just help us scale and brand awareness, really. So I think things like this is really good. So thank you to Rebecca, to Ryan, the FinTech North team. Thank you to Claire Lewis. We're currently on the Baltic Ventures program, which is really good. So yeah, I think just putting us in touch with people who
help us grow.
Yeah, can help us grow.
Fantastic. Thanks both. Best of luck with it all.
My friends.
One question here, or no time? Do a quick one.
If there is a question from the floor, absolutely, we can get one in very quickly.
You can pick up afterwards. We've got a drink to
Yeah, I think we may have to pick up afterwards. Julian is a very strict taskmaster. That's fair enough. In that case, next to the stage we have, let's have a look. Moses from Money Rates. Are you with us, Moses? I can see a shape moving in the background. Yes, Moses is here. Welcome.
Good evening, everyone. I'm Moses, CTO of Money Rate, and I want to thank FinTech North for giving me the opportunity to be here again. Since the last time I was here, we've had a whole lot of opportunities, and we've grown significantly, and we're among the 20 startups that are selected for Startup Bootcamp in Netherlands. So thank you so much. MoneyRate is an exchange platform that is primarily focusing on Africa exchanging within African countries. There's a peculiar problem in Africa where if you want to change a currency from one country to another country's currency, you have to change it from the local currency to dollars, then from dollars to the other currency, thereby losing a whole lot of money. So there are a whole lot of problems that we've noticed with this model, and we are solving them with our solutions. So to quickly run through the problems. So I just explained this, that if you want to change money, you have to convert it from a currency to a third currency, then before you change it to other currency. Doing this, you lose a whole lot of money. The value of your money reduces significantly when you are changing from one currency to another. And another problem is, we are not the only one that have noticed this problem. Many other fintech companies are solving this problem, but they are running very, very slow, very slow. And one thing we have learned since we've launched is in currency exchange, the speed at which you change people's money is as important as the rate you are changing it. Yeah. So Other fintech companies, they are quite slow because they don't have enough money to power 54 currencies in Africa. So they don't have the liquidity. And to solve this problem, we have these solutions. So in all these Africa countries, there are BDCs, and BDCs are local currency exchanges. So other fintech companies have decided to exclude them from the platform. But what we have done is to include those people into our platform because, hey, they have the money, a whole lot of money, right? But they don't have the platform to change those money with people. So we have provided our platform to them to change the money on our platform. So, and also by doing this, we've brought so many people to the platform, and they're all trying to change their money. So it creates a sense of competition. And when you have competition, you see people are reducing their rates. So other people that need this money tends to get a better deal for their money. And also, because we have plenty of people on the platform, so there is 24/7 liquidity. So we've solved the problem of liquidity and also speed. So you can quickly change your money and you get it almost immediately. In fact, we could do 10 seconds. I mean, at worst case, maybe 5 minutes, right? That's instant transaction fulfillment. So when you change money on our platform, you get it instantly, unlike other ones where it could take 2 days, or sometimes it could even take weeks before the money gets to you. So we have an Android app, an iOS app, and also a web app where, irrespective of the device you have, you can always change on our platform. So we are currently in 13 countries. So you can, if you're a Nigerian, you don't need passport of any other country to have a wallet in that country. So you can always have wallets in all the 13 countries we currently support without having passports or been to that country before. All right, so this is our platform, and we can bring your questions while this is playing. Thank you.
Thanks very much, Moses. It's really fascinating and exciting to see the speed at which we're experiencing growth in trade between the UK and African countries. Where does the north of England, where does the FinTech North ecosystem fit in your plan?
So the platform they have provided to us to have this conversation and also to connect with other people that are processing money in the UK is very huge, and it's giving us the visibility, not just in the UK, but also in Africa. So we really appreciate you for this.
Fantastic. Thank you very much, Moses.
Thank you so much.
Thanks very much for coming back and joining us today. We really are in the home stretch now, only a few more minutes to go. So we'll keep the pace super high. Next, we have got Georgie from Orlando. Welcome back, Georgie.
Hello, guys. My name is Georgi Tonchev. I'm the Managing Director of Lando Solutions. And you'd ask, what's Lando Solutions? We proud ourselves as the best fintech partner. We work with a number of fintechs, large organizations, smaller organizations, startups as well, helping them to scale faster. And I'll just speak a little bit about that. We're based mostly in Bulgaria. We opened up our Manchester office about a year ago, and we came here deliberately to the Northwest. Myself, I spent 18 years in London, got a little tired, moved back to Bulgaria, and then rediscovered the North magically, and I fell in love again with it. And but the most important thing is the Second biggest region where FinTech is absolutely booming. The universities are very good. There is number of graduates which are graduating from very competitive programs. Talent pool is getting wider and wider. That's why more and more big companies doing their R&D centers here. So we thought that's the best way to move in as well. We work with a number of organizations. You can see them mostly Manchester-based because that's where our focus is. But we want to expand our network and start working with other Northwest hubs like Liverpool, Sheffield, Leeds as well. So that's why we're here. I was kind of a West event in Manchester. I was a successful one. So I'm keen to understand more about the Liverpool ecosystem, specifically the wealth tech and insurtech areas, which I understood are very strong. And our kind of expertise in insurtech is quite unique as well. So the biggest challenges for the tech sectors, for all of you founders and your investors from a talent point of view is there is not enough talent. There is no enough trained talent. There is a lot of graduates, there is a lot of boot camps, but not necessarily people with ready skills to get the job done. So that's where we want to help, and we want to come and we do that. So how we do that? We develop a specific framework, which we call the scale-up framework, getting it together with the Scale-Up Institute down in London, where we pretty much create a team, which is led by one of our most kind of a senior tech leads or fractional CTO at the moment, let's say that way, and blend fresh graduates together with experienced business analysts, project managers, and product people from our side, and ideally from the client side as well. And we create a coherent team, which is able to deliver much faster in much better quality as well. The talent pipeline, working with universities globally. We do this in Bulgaria, we do this in Israel, we've done it in France in the past as well. Assure that we have the right talent pipeline. And ultimately, we want to work with scale-ups, which they want to grow. And the two types of scale-ups we work really well with. The ones who had big closing of investment, and they kind of pushed by the investors and their own ambitions to scale faster. And they need people, and they need framework, and they need organization to do that. And another type of scale-ups who have very big market success, and they need to grow faster. Very often, as you well know, who has done the journey from startup to scale-up and more on, the biggest problem is not the people, is the lack of organization, is the lack of framework. Often the CTO becomes kind of the man who does it all. It doesn't sleep, burns out, becomes the bottleneck as well, and kind of slows the growth of the whole organization. And we're here to help exactly create the team, create the framework, make everything much more sustainable in a way to help the CTO, to help the existing team, and to help the company grow. Who we are? We're about 8 years old, about 50 plus people, mostly based in Bulgaria, but kind of work remotely from all around the world. 75% of our projects are FinTech, mostly PayTech and InsurTech and some banking as well. Yeah, that's us. In the last 36 months, we helped 3 scale-ups using our framework to grow significantly. And I will walk you through one case study. This is a Brazilian payment FinTech. We onboard kind of from fractional CTO all the way to kind of creating a team for about 7 people, DevOps, product owners, so on and so forth. And they grew significantly, 570% over 2 years. They got a license from Banco do Brasil, and kind of it's a big success story. And I don't think so they would have done it without us, because it's not easy over there. And that's what we want to do here. Kind of to work with scale-ups specifically who want to grow with reliable tech partner and really to grow together. So that's us and that's me. Thank you.
Very much, Georgie. The skills pipeline issue is one that we see in the media all the time as a bad news story, just the sheer scale of the problem, the challenge the time bomb we often see it described as. Can you share an exciting message with us? What are you most excited about for the coming 12 months?
Hopefully we can do similar in Liverpool as well. So we're working with their kind of a FinTech Masters program specifically, and kind of try to onboard some of the best people into kind of our programs. And because one thing I didn't mention is like we don't want to deliver everything from Bulgaria or anywhere else. We want to employ local people because we believe local business for local business needs is very important. Getting local graduates as well. So this is the biggest challenge we're going to have over the next 12 months. Onboarding people, finding new projects, and really kind of ingraining in the local ecosystem.
Brilliant. Thank you very much. Thanks again for joining us. We've got James Garner joining us from Sticky. While James comes down to the stage, I'd just like to thank the lighting team. The red light's a really effective way of keeping the heat on everybody. The pace has been brilliant today.
This is the final pitch.
The final one.
James,
okay, wow, no
James
pressure.
is also going to recreate with Hutch's rendition of Aha, Take On Me, which was featured in the Philharmonic last night at about 11 p.m.
Welcome back, James. You are closing out the entire show. No pressure.
No pressure, folks. And I'm going to keep this super quick because there's a glass of wine with my name on it somewhere just in the room behind here. I want to make this the 2 most exciting minutes that have ever happened in FinTech. And I'm going to ask you a couple of questions. The first one is, would you believe me if I said I had more card machines in my pocket than people who are sitting here? You probably wouldn't, but it is true. And what if I told you that if I took off all of my clothes right now, which I'm not going to do, you could still pay me without anything at all? Our business makes stickers. They look just like this. They're always the same shape and size. They're easy to recognize. You can simply tap on your phone to make a payment. We do open banking, bank-to-bank transfers, as well as card payments, and they're always less than 10 seconds. They don't need a power supply. Some of you in here will have seen these before. We have raised money, and I know lots of good people in FinTech are in here and like our product too. But what I'd like to do actually is invite this gentleman over here to take part in a demo. Now, I don't have anything on me at all. In fact, my phones are over there in that little stack, and my stickers are as well. All my pockets are empty. I've even taken off my watch. But you're still going to pay me. Have you got your phone with you?
Yes.
Let's take it out.
Is this a trick?
It's not a trick.
Are you cleaning me out now?
So this gentleman here is going to pay me using my left hand. All right. Now, this is a totally normal left hand. I promise you, it has 5 fingers. You might not be able to see from here, but I can count them if you like. And you're just going to tap your phone onto my hand here. And when you do that, you're going to get a notification. Just unlock your phone with your face. Perfect. Here we go.
Okay.
We got it. It's coming. I can feel it.
Okay. This is a conjuring trick here.
It is a conjuring trick.
I keep emptying my bank account.
We could be. You just lock it for me and then unlock it. You're going to get it.
Okay, let's lock it. Let's unlock it.
Brilliant.
There it is. It's log into captive Wi-Fi.
We love that.
Is it because the phone's not connected to the internet?
It shouldn't be.
Okay. Well, in that case, yeah, it's locked.
Yeah, do it from there.
Unlocked.
Yeah.
Okay. Maybe try with the...
It's going to be right at the top, just there.
If I've got a MagSafe case on?
It could be.
Maybe we're going to have to talk about this hypothetically.
Well, I'll tell you what we'll do.
We can blame my technology.
We're gonna blame him.
Yeah, I mean, I'll happily accept
he's trying to
blame.
sabotage. So we'll just try another phone here. So if you don't mind holding my mic for a second. Thank you. So we'll do it like this, okay? You can see my phone. When I put the phone over the top, see that notification appear? Just like that. I can tap the notification and it will take me straight inside.
I can see his passcode, ladies and gentlemen.
It's not very exciting.
I'm looking away out of politeness.
And it takes us in here, and a single tap, you can use your Apple Pay to pay, just like that, from your hand. This is pretty exciting for a few reasons. The first is we think that everybody in here is going to have one by the end of next week. If anybody does have a spare hand, we are currently looking for volunteers. We don't do feet, though, unfortunately. We're a lucky business. We've been around for 2.5 years, and so far we're processing £1 million a day in the US and the UK and a little bit in Europe as well and South Africa. My goal is to take that to £1 billion by the end of this year. Not a billion a day. That would be the regulators may be interested in that. And we do that by solving problems in physical spaces. And the number one problem is how do you take payments quickly and easily? This is just an example of how you can embed that technology into any product, surface, or human. Any questions? Where do you buy one? I can sell you one if you would like. I'm not this one. They're quite hard to take out. Yes. Yeah, do you want me to come on over? Should we have a go? Go on then. We've got 1 whole minute. So we're coming up here. Which row? Here. I'm going to come behind.
Charlie first.
For our regular stickers, they are £1 or $1. In the hand, they're about 60. And that's only because we have to give you the stuff which you use to put it in. And that's like a single use. We're actually working on making reusable ones. It's quite hard though. Yeah. So when you tap on here, you're going to get a little buzz on your phone.
I also have a case on, so should I take this off?
That's all right. You use your phone to pay for things, right?
Yeah.
Okay, so let's make sure NFC is turned on. Have you not used that before?
Yeah. I've got a Google one.
Do you know where the reader is? Oh, it's there. You got it. We're in. And it's here on his phone. Not that you can all see it, but it is true. And when you press pay. So what you saw on my phone, we're using Apple Pay, but we can do bank-to-bank transfers as well. That means that the phone instantly pops into choose your bank, you press the bank, and you get taken into your bank to approve the payment. Even on card with Apple Pay, we approve transactions of up to 10,000 to 20,000 a time. We have businesses that have turned over £10 million using this technology. They don't have any hardware, they don't have any subscription. And for small businesses, we do payments at flat rate 1% without any fixed fees. All the transactions are online, even though they're face-to-face, which means they're authorized in real time, they're all 3D secure. And even though we've processed about 300 million, we've had 0 chargebacks to date. Very exciting, folks. Time to drink wine. Let's go.
Simon. Thanks very much. Definitely a memorable highlight from the Manchester conference. And I feel like so much has changed since then. Thank you so much for closing out the conference. Thank you for using your question time to do a live demo. That's the kind of thing we love. I'm not going to take up any more of your time other than to thank you for supporting everybody in today's showcase. And thanks for listening to me. I'm going to hand back to Julian for his closing remarks. Thanks, everybody, again.
My closing remarks are to hand over to Ryan for his summary remarks. He'll then hand over to Joe for his closing remarks, and then we can have a drink.
Yeah, I'll just keep this pretty quick because don't want to be in between everybody in a drinks reception. Massive thanks to Oliver and Julian for hosting the showcase. It's always our favorite part of our events. Just want to say a huge thank you again to our headline sponsors, Lenvy, to the team at Villiers as well, being brand sponsors here, MasterCard, Growth Platform, the University of Liverpool, DTM for sponsoring our name badges, and also Intercash for sponsoring the pre-conference dinner last night. Huge thank you to Rachel as well, who's watching on the live stream. We've had about 30 people with us on the live stream today as well. So we think we reached about 140, 150 people today with the conference, which makes it by far the biggest ever FinTech gathering in Liverpool. So we're really happy with it. Thank you all for staying so late as well. It's a long day. We really appreciate that. And yeah, thanks as well to you, Ryan, as well, for all your hard work promoting it. So yeah, thanks a lot, guys. Ryan, take it off.
Yeah, I won't keep us here much longer. Again, yeah, just to echo what Joe said there, thank you very much for coming. We want this to be a bit of a catalyst for, developing FinTech in the Liverpool City region. So hopefully we'll see you at another one of our events in the region, which is coming up in partnership with DTM Legal. There's a drinks reception now that'll be on until, I think we've got this space till 6:30, but I think we need to be out at 6:30. So I think I'm missing something else, but I'll wrap up there. Thank you again, and we'll see you at some of our events in the future across the north. Thanks, guys.